All right, let's go. Hopefully, everybody's having a fantastic morning. Hopefully, everybody had a fantastic weekend and are so far having a good week. So, Bitcoin has a brand new weekly open. This is going to be week number 2 in February. It's actually had a nice rebound last week on Friday. Biggest move ever in terms of points moved on Thursday. We're going to discuss a lot of that in today's video, as it was happening live last weekend, the big down move. And then, of course, Friday we saw the low and then a nice rally. We're going to see if potentially we have capitulated, or is there more capitulation on the way. We're going to look in some on-chain data. We're going to obviously look at price action, longer term charts, and a few other things to try to get a good idea as to what Bitcoin may be doing here this week. Right now we're trading on the current week low, as you can see right here. 2021's high is acting as very near-term resistance. We'll talk about all the important levels to keep an eye on. We had a down move yesterday on the dollar. That's important, as a weaker dollar, I think, could ultimately help Bitcoin achieve some strength. Obviously, we'll talk about all this and more today. As far as live trades, I have none. I only have one open right now, and it's one we took yesterday during the members only live stream. There really wasn't anything moving yesterday. Yesterday, things were extremely boring, very slow. We basically took a short on hype, and we took it up in here at December's open, and that's the trade that I currently have open. So yeah, we'll see. It did break down out of a near-term trend. Let's turn off this real quick and go out to the larger time frame charts real fast, just so you can see this wedging action that is taking place up here. Now, the last 2 weeks, this thing was bullish. So here's your weekly chart. You can see a very strong move 3 weeks ago. Last week also was a strong close. Very, very small lows. Like, this thing has basically just been range bound. So right now we're trading just under last week's low, or right at last week's low. We liquidated last week's low. Why is that important? Well, because if it's going to stay range bound, then this is the level it needs to beat, right? So if we're looking for a trend, we want to see price continuing to push. That just simply means making lower highs and lower lows beneath this level. And as you can see right here, it isn't doing that right now. Currently, it is trying to build in a near-term range. And these are levels that we typically... So, for instance, if I had a bullish bias on this asset, I would actually be looking for longs right here. So you need to understand that if Bitcoin does rally today, that could help this rally. However, what you have done is you have broken out of a longer term chop or a longer term consolidation. But really and truly, as far as the range goes, I generally rarely ever look at trend lines. To me, trend lines are very subjective. They don't really tell you what's going on. If we're looking at this in terms of just the last few weeks, you're just range bound. You've done nothing here. You've not broken down out of anything. So be careful if you're using trend lines. The level to beat, the real level to beat, obviously to lose this range, is going to be this swing low right here. That is not a weekly swing low. Okay? You've already liquidated the weekly swing low. The next weekly swing low is all the way down here. So in terms of range, you've done nothing. You've not broken it. You're still in it. If you want to look for longs, this is the area to do that. Now, as far as is it long worthy? Can we even think about longing the asset? Well, in order to do that, we must see if are we closing daily candles above the 21 exponential moving average first and foremost. The answer to that question is yes. Yes, we have been. It does look like it's lost its bullish momentum at the 200 exponential moving average, and that is typical in a bear market. Is this a bear market? I would say it is. So the crypto market on the whole, I would say, is absolutely in a bear market. However, as you can see here, you are up on the year. You're bullish on the year. So this one is a little bit different. than your other cryptocurrencies. As last month was a strong month, so far this month you made a fresh higher high. So in terms of trending, is this candle trending? The answer to that question is yes. You have made a higher high. You have pulled back off of that high and are now in price discovery, seeking out demand. So I don't know if it's going to find more demand or not, but that is what it is currently doing, objectively speaking. So objectively speaking, you can absolutely have a bullish bias on this asset. I don't like it because it's closing weeks under the 21 exponential, the weekly 21 exponential. However, so for me in my analysis, I will always allow the larger time frame, the weekly chart, trump what's actually going on the daily chart. However, reversals take place on the near-term charts. So literally the 5 minute all the way up, right? That's where the reversal takes place. So if you're actually looking at weekly charts, you may miss the reversal. The weekly charts are really good to get you with the trend, or at least have you trading in the direction of the trend. But if you're trying to catch near-term reversals, you're going to have to do that. You're going to have to operate on a much smaller time frame. So as of right now, I mean, I wouldn't say that a reversal has happened because you could not close the weekly above the date of the 21. However, you're still closing days above the 21. Now with today is actually trading under the daily 21. And this is not the first time that it's happened since this range took place. So you could get a down close today, and then tomorrow could see the actual move up. I think you should be watching this if you're looking for bullish opportunities. If you're looking for bearish opportunities, it's also one of my favorites because it is up. So in a sense, when we would rather short weak assets, on the long term, this is a weak asset. You are trading and closing days under the 200 daily exponential. You are closing weekly candles under the weekly 21. So it is weak, but if we're going to see a correction in the crypto markets, this asset has actual value as it is an exchange. The Hyperliquid exchange, they take token, or they buy tokens with trading profits and fee profits. So they run a similar concept as like Apple or any other large company doing stock buybacks. So typically this music is literally destroying train of thought. Give me 1 second here. Going back to my playlist, I'm sorry, I can't concentrate with popular music. All right, anyways. Excuse me. Yeah, so I like it. It's one of my favorites to watch. It is in a range bound. So I honestly believe that we could see some range resolution here in the next few days, and that's what we're looking for. So currently on the month, is at least for February, you're back under the open, which was acting as support, as you can see right here. So it is big to be down here for short traders. But like I said, key level, crucial level for longs. To be honest with you, if you lose this level to the downside, I would not even be thinking about a long until you got down into here. And that's how I would approach it. So as of right now, I'm going to hold my short with the caveat that if it starts making higher highs and higher lows on an intraday basis, I'll probably just bail out of it because my entry is absolute dog shit. It is a terrible entry. Here is the entry. And let's get rid of this. So right here is my short side setup. As you can see, I was short from December's open. That's why the entry is there. As it was trading above the 4 hour 21, I didn't want to be looking for the shorts as the pressure was still to the upside. You were still kind of formed up into that trend. But now that you've broken out of the trend, or at least the trend line, we may see some more weakness come, but it is very much at support. So there's no reason for me to close this trade, obviously. And I can't take profits yet either because with this account, this is an account that I run publicly so people can watch me use a real money account, not a paper account. And I generally risk 100 to make 300 on this account. It's a very small account. So as you can see, I can't take profits because it isn't reached a big enough move to the downside yet to scale out. But once that happens, I will start scaling out because I always do. We can't predict price, so there's no way I'm going to not take profits. You know what I mean? So yeah, we'll see what happens with it, but I have plenty of dry powder if we can find something to do here. So as far as Bitcoin longs, I do kind of like the idea of looking for a Bitcoin long. Let's go out here to the daily time frame. Like I said, we're just now right off of the near-term low. There has been many indicators that I've looked at so far to indicate that this is potentially going to be the local low for a while. All right. I'm not saying Bitcoin won't break down and make fresh lows this year. I'm simply stating that it probably for the next 2 to 3 weeks minimum, this will most likely be the low. So I think your huge downside volatility has probably been squashed. Now, dollar weakness could go a long way in helping that, but we'll see what happens with that. So right now, Saturday's low right here is the near-term area to watch what happens after price gets down there. We have not liquidated Monday's low yet. So right now, very tight range. This is your weekly range. Very tight, very small. You could be setting the weekly low today. Yesterday's low is right there. But because Saturday's low is just below it, I would want to see it liquidate both of those levels and then bounce. So that's kind of what I'm waiting for. And then as far as like the lowest that I'll watch it go to will be this 12-hour swing low right here. This is an intraday swing low. It's not a daily swing low, and it's a high time frame intraday swing low. I don't think Bitcoin needs to go down here. I think literally all it needs to do is get under Saturday's low, and if it can bounce from there, I think maybe then it might go towards the top side of the range, which has already taken place. You've already liquidated, which what was Friday's high. That took place on Sunday. So you could be looking for prices to roll over and come down into the $66,000 area. Yeah, we got 15 minutes until the bell. If it's going to reject, if it's going to be a downside trade day, like if you're targeting this low, then I would not want to see it putting in a much higher swing than right here. And then ultimately, if you're looking for shorts, you definitely don't want to see it breaking up above the weekly open. For my long padres out there, the folks looking for longs, I think you can't really do anything here. Not yet. I do think you should be looking for your entries, for long entries at daily lows. Yesterday did make a fresh low. You see how that happened? This was your Sunday low right there. Monday, you traded down below. That is where you should have been looking to put on long trades. And so far, you're not getting any upside continuation from that move. So as of right now, today's range is directly threatening anybody that got long yesterday. That's why my favorite place would be down here. If it could get down here, liquidate this swing low, and then reject, I would like to put long risk on there. If it breaks below this low, this is very important because I don't want you trying to buy every single 5-minute candle low. You can run into a lot of trouble like that. You can get your account destroyed trying to do that. If you are trending below this low, you do not look for longs because the next obvious place for it to go to is Q2 of 2024's close. That is the objective support right now. Until you close a quarterly candle under 62,668, that is your objective support. So if you're trending under this low, you are not looking for longs because down here is the better place. trending just simply means lower highs and lower lows under that price. And it is that simple, but for some reason people have a difficult time understanding that concept. I am short USD JPY over there as well, but I mean, that's also not a very good entry. However, I'm just looking for shorts under the yearly opening range. It broke down under the yearly opening range. I was actually short up here from last week's video, and then as you can see, Sunday, when the market opened, it literally threw up a wick, and since it happened while the spreads were wide, it stopped me out. So I had to jump back on it yesterday, and I jumped back on it intraday. I wasn't really seeing what I wanted to see to get in on the high wick entry. In fact, it didn't ever make another higher wick, as you can see here. So I was looking to get short here at this price, but when this candle opened, it did not push up above that. So then on a 30-minute chart, I noticed that it started to make lower lows, so I had to chase it in a sense to take the entry, and that's why the entry's down here instead of up here. If you were wondering, that's why. It never made a higher high. Yeah, and I look for higher highs, generally speaking, when I think it's going to go lower for the entry. I don't like to chase price, but yesterday's move on the dollar was pretty large. It didn't really give an ultimate opportunity, or what you are used to seeing entries from me, right? So we'll see what happens. Nvidia, huge rebound on Friday. You literally retraced all of last week's downside move. This is Monday, Tuesday, Wednesday, Thursday. So literally every day last week on Nvidia was down. Lower highs, lower closes, and then one day you bounced aggressively, and you have stopped out anybody that took the short from the yearly opening range rejection. So if you took that trade with us, if you did not take profits, unfortunately, you're not going to get to because those buyers came back with a absolute fire under their butts, if you will. This is the low end of the range. This is where we wanted for the bearish trade to continue to work. We needed to see a breakdown below. You're in a range-bound market. When you're in a range-bound market, you never look for the breakdown. You always take profits when you get your move, because in a range-bound market, you don't get the breakdowns. This isn't, you're testing the top end of the range from December, but if you look at all of this price action as a whole, right? You've been in this range literally since September of last year. So this is the range to beat, and you're in the middle of that range right now. So sellers are going to be very much focused on what Nvidia does up here at 194.49. I mean, like, seriously, if price continues to push above that, your sellers are not going to get involved, most likely. Your professionals anyways. So the pro sellers, they're going to be looking for a rejection here. And if they get that rejection, then they may. But this rejection down here, to me, speaks volumes to me. So I'm not looking for a short on Nvidia up here, but it could work. It absolutely could work. So that's kind of what you got going on right here. We go down into a pre-market. You can see that that level is still firmly intact. You have not tagged it yet. So this is the upside target, I would assume. This is literally 2 days of trade. So yeah, I would assume it's going to get up there eventually. If you still think that the markets are too frothy, risk markets that is, and they are going to roll over and Nvidia is going to lead the rest of them, then you're going to be watching 189.84 for the rest of the year. As long as it's trading above that, the bulls have control of price action. So the only way you can even think about shorting this is if it rejects here. I probably wouldn't get involved if that just happens, because I think you're probably going to see it play around this level for a few days. So you'll probably get that liquidation and then a rejection from the first rip. Then it might drag down into here for a couple days as you stay in price discovery. And any move back up into this area, that would probably be the run that's going to smoke everybody. So I don't know if you're going to just break out through here or if you're going to play games for a few days here, but I would feel much better about shorting this rejection if price starts to show me this is resistance again. So probably going to have more of a long bias on Nvidia moving forward because of what happened down there. I don't love the idea of the short here anymore. Price is literally telling me that this is not a short. I mean, we had an absolute beautiful move down. This was like pure poetry. This is like the absolute perfect trade, perfect setup, perfect reaction, all of it. The fact that it got down here tells me that you've seen all of these shorts take profits, and then the longs jumped on while that was happening. And that's why you got such an aggressive move back to the upside. So I'm no longer in the Nvidia short. Tesla. So Tesla's right now in there's a lot of rumors going on that Tesla's going to merge with XAI and SpaceX, which would basically make Elon Musk the richest man in the world and one of the most powerful. Obviously, he's already the richest man in the world and one of the most powerful, but Tesla would be like a behemoth of a company, being leader in the AI space, being leader in the space. And then obviously we know that his car company, being Tesla, isn't, it's not that dominant yet, but what he's doing with it, what he has plans for in the future, is obviously robo-taxis dominating the country. So literally this ticker has the potential to blast off, if you will. So as long as it's trading above range lows, which you are here, you could potentially look for longs. November's low is that liquidation point. So basically you're trading up right now back into the daily and weekly 21 exponential moving average. Though I wouldn't be looking for buys here today on Tesla, but if it could give us a rejection here and trade back down into this area, liquidate those lows, and then get back into the range, I would be willing to be a buyer there. So nothing really to do here on Tesla today, but if it could get back down to 382 because it rejects this maybe on the first attempt, then I could definitely be a buyer. And if it breaks down below 382, then it's going lower, and I would rather pick it up at a lower price, but I am interested in buying it. This is a long-term range here, and it is holding at highs. That is typically good. That is typically a good sign. So November's low is that oh so important level that basically tells you that Tesla is still in a range, in a multi-month range. So as long as you're trading above it, I would be more bullish. I like it long term. If you're trading under this, then you're coming down to here. And that would be the next area that I would love to pick some Tesla shares up. But long term, the trend looks good. You're above 2024's open. You're above 2025's open. So clearly the last 3 years, the trend is up. You're moving up. You're moving higher. You're making higher highs, higher lows. So I like Tesla long term. Looks really good. It's a beautiful chart. It's very constructive. And I am very much loving what I'm seeing take place up here on highs. So yeah, that's a little bit of what we're looking at here. I can't believe Intel is back up to $50 that quick, literally. This thing looked like dog shit in 2025. Now it's right back up on highs. And then, of course, the next big thing that everybody's keeping their eyes on is gold. Here, let me say this. As long as gold is trading at or under around $5,000, I have more of a bearish bias on it, simply because I think that the profit taking is happening as we speak, as we're speaking right now. I believe a lot of people, or a lot of the professional traders out there that have been in gold long term, if they're going to be taking profits, they're not going to do that when you have a blow off type of move to the downside. They're going to wait for price to bounce, and then when price bounce, then they'll distribute into those highs. So we did get the bounce. We did see a rejection at 5K. We set in a higher low here. That's so important. This is a higher low. And now we are right back up there again. So it looks like gold wants to build in a long-term range here, with the bottom edge of that range support being 4,600. So I don't love the idea of a gold short here, is what I'm trying to say. And then if you couple that in with the very simple fact that the dollar is extremely weak yesterday and looks like it's extremely weak today as well. Let's go take a look at it. I don't love the idea of gold shorts. I want to short gold when dollar's strong, right? Not when it's weak. And DXY is looking pretty pathetic here. So trend on the DXY currently heading lower the last few months. Trending lower. Longer term, you're in a range as long as you're above monthly support, or the better way to look at it, as long as you're above July of 2025's low. As long as you're above that, you're still in a multi-month range. However, on the near term, last 4 months, you've been trending lower, making lower highs, lower lows, and lower closes. There's no reason for me to anticipate that trend to stop. So we have a sell side bias on the dollar right now with a downside target of 95,550. As long as I have that downside bias, very hard for me to want to come in here and look to short gold, especially when on the near term, it is obviously making higher highs and higher lows. This right here was a bearish engulfing day where you smoked the prior day's high and the prior day's low, and you closed as a bearish close. But this is the USDT futures perpetual swap contract. If you're wondering why this chart looks different than your gold chart, that's why. We can trade gold now on Weeks, which is a crypto exchange. So I'm looking at the ticker symbol that lines up with what I'm trading. Okay. So if your gold XAU USD or just gold or American futures chart looks different than this, that's why. But it's still doing the same thing, because even though it's a perpetual swap on a crypto exchange, it still tracks the spot price of gold. So they do pretty much the same, but the candles do look a little bit different because this asset never closes, whereas yours does, right? The US one closes. So we just got the bell, and Bitcoin really hasn't done anything yet. Still kind of just chopping around here this morning. So yeah, I mean, it's not really doing anything. It did make a higher high. So basically, if you have a bullish bias on Bitcoin today, then clearly you would be wanting to see support hold at 68,488. And if you're looking for shorts on Bitcoin, this is where you'd be looking for that. I mean, I don't know if you're going to see it, weak dollar and all that, but yeah, this is where you should be looking. If we look at the deltas real quick, you can see the deltas are slightly negative here, but not trending. They're just negative. So the sellers do have more of an aggressive stance this morning than the buyers. That does not mean price will roll over. But still, if you were looking for shorts, this lines up with that thesis, as well as the session volume profile, as your point of control is down here as well. So, I mean, clearly it looks like the buyers have been trying to buy this. But the reason it can still line up with a short side thesis is simple. if price starts to push down below these lows, you're going to start stopping these buyers out. And that could propel prices lower. I'm actually waiting for Saturday's low. That's the level that I want to wait for and see what happens when it gets there. But in theory, if you just take out yesterday's low and bounce, you could potentially look for longs there if you have a long side bias. Most people do not. Most people are bearish right now. And they should be, because this chart is bearish. You're trading under the February VWAP. Whenever price is trading under the February or the monthly VWAP, that literally means that you have more heavy sell side pressure in the asset. It did make higher highs and higher lows for 3 days, right? And that's it. That's it. The very near term still, this thing is in price discovery. I can't look for shorts this low on the range, and I don't want to look for buys this high on the range, if you will. So that's why I'm in a short on hype. Let's go look at Fartcoin. Fartcoin is now trading under 19 cents. We first started shorting Fartcoin in 2025, and around August, that's when we started shorting it. We were shorting it at $1.50. We started shorting Fartcoin at $1.50. Now it's trading for 18 cents. So yeah, we pretty much nailed Fartcoin to the downside. Obviously, I think the majority of that juice is squeezed. So I don't love it for the upside. This thing has no utility. It's a literal meme token. It has zero use case or real world value other than being a speculation vehicle. So I really never have a bullish bias on Fartcoin ever. But it's hard for me to want to get short on it after it's already seen such a massive move lower. That's like 80% or even more. $1.50 down to 18 cents. Yeah, you're looking at close to 90% off. So, I mean, we got most of the move out of it. You can still make 100% of a short out of it, though, because it could go to zero. I don't think it will, but I love Fartcoin as a tradable asset. I love it. It has really good liquidity. It moves really good. It's a phenomenal trading vehicle. But as far as like real world value use cases, pumpamentals, if you will, this thing has none as far as I'm concerned. Absolutely zero. All right, let's say hello to everybody, and then we will line up a setup if we can find one. Good morning. Let's get it. Let's go. Good morning. Good morning. Pants check. No pants. Never. Good morning. The chart looks bad. All charts look bad right now in the crypto world. Thoughts on XRP? Let's go take a look at XRP. Yeah, but most of your crypto charts look like total dog snot right now. They're bad, but I mean, I don't know. Like, I don't know what long-term benefit XRP is going to have or whatever. But I mean, it's holding above its long-term range of 50 cents. For me, for a long time, it felt like XRP just could not leave 50 cents. Well, it broke out. It was a very strong breakout. Traded all the way up to 350, a little bit higher, and then it's fallen off. It's fallen off. Is it oversold? It absolutely is. You're at oversold levels. If this asset has fundamentals or real world value or a use case, then it should find support pretty damn soon, right? If it doesn't, it won't. But generally speaking, whenever like my favorite asset that I want to own long term hits weekly oversold levels, I'm definitely interested in being a buyer. So you do have that going for you on XRP. It's doing pretty much the exact same thing that Bitcoin is doing. It's down on the year. You had a really nasty day last Thursday, and then Friday you gave it all back. And now what you're seeing here is you're trying to accumulate the range, or you're trying to accumulate those gains. So you're building in a range a smaller near-term range at the top of the capitulation move. That is constructive. It is good. That is what you want to see, but it has to hold. It has to hold. Same with Bitcoin. It must hold those swing lows. If it can't, then more lows are probably, or at least potentially, on the way. So yeah. Okay, so here goes Bitcoin. It's heading lower. XRP is probably going to do whatever Bitcoin does today. So if I'm looking for Saturday's low to hold, then I would be looking for the exact same thing on XRP. I would be watching for these lows to hold. If you're trending under those lows, you got to be careful. It could be coming back down to retest the lows at 120. Good morning, Trade Talk. What's up, Tony the Fish, Bill, Jewelry Affairs, Stephen, Epping, everybody. Thank you for being here. So, yeah, let's see what we can do here. So, Farcoin rejecting the last. Yesterday was so slow. I'm pretty sure today is going to be slow as well. At least today, the VIX is gapping up a little bit, but you're still trading under yesterday's open. You're actually trading under last week's close on the VIX. So as long as you continue to do that, as long as you continue to trade under last week's close, the threat is that risk markets are bullish. So for the last 5 weeks, 6 weeks, the VIX has been making higher weekly closes without fail. This was a higher weekly close, 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 higher week. Whenever we see that, we have to be very, very cautious because volatility is expanding and making higher closes. It's also making higher highs and higher lows. And as of right now, you're trading inside of last week's range. But as long as you're under last week's close, the threat, or the more near-term threat, is a bullish risk market. You can see risk markets were bullish Friday and yesterday. So you're right back to all-time highs again. You're back above your monthly VWAP. It's a very choppy market, the S&P 500. It's like, for whatever reason, it cannot, or literally refuses to break out. Well, the reason for that is because of a lot of your bigger tech companies are trading range-bound right now. NVIDIA specifically is range-bound. If NVIDIA breaks out, you get your others to follow suit, and they're all breaking out, making fresh all-time highs. The S&P goes on a run. So while that's going on, we don't really, we can look at the 4 sectors and see what they're doing. The top 4 sectors. But yeah, right now it's just, it needs those bigger assets. So Bitcoin's seeing this slight drop here. Let's go back to the Bitcoin chart. This is the low for me that's most important here. We don't need the session volume profile, do we? We can clearly see that each day and what it's done. Dollar yen is just rolling over. It's literally getting melted just as strongly as it did yesterday. That's so weird that Bitcoin can't even get any strength going with dollar weakness. A lot of people are bearish on Bitcoin right now, and obviously it's because of the chart. And the bears have been on the right side of the trade for the last few months. But I think we've seen a lot of stuff that basically indicates that this was probably a capitulation. So generally speaking, we don't want to see Bitcoin go any lower than this. If this was a capitulation low, we want to see that hold. We can look at February's entire price range real quick. Let's make sure we have it before we get rid of those lines. So basically all we're trying to do is look at the session volume on the monthly range. And there you go. So you can see a lot of volume being thrown down in this range. Huge volumes. Very light volumes up here. And then the next spot to fill in will be 73 up to 74. So yeah, this is a very important level to hold. I would like it if it couldn't even get down there, to be honest with you. As you've liquidated the weekend price action, so should be good enough, but we'll see what it does. Heavy selling pressure on some of those lower, because that's what we want to see on capitulations. That pain just causes everybody to bail. And then price rejects and turns around and heads back up. And it did with the Fury. So it is literally pretty much exactly like a capitulation. See how I did like that? Like I said, if you were looking for shorts, right here would be the perfect place to do so. It's a 2% move, so you could have absolutely taken profits on that. I didn't take it. I'm already short. I'm short on hype, so I'm just kind of waiting for this to give me a move that even looks remotely similar to a breakdown. This does not. It's barely moving. I want to see something like this. I want to see something aggressive, an aggressive move to the downside. Otherwise, it's being accumulated on the long term. With this, the deltas have been negative for a while, and you're not seeing like a big trending move. That's worrisome. If we look at the dailies, it is doing the right thing, at least for now. It's been really choppy. This was a higher low day. This was a higher low day. But you're under pretty much everything that matters at this point, so if it's going to dump or at least move lower, it's got to go from here. The more time it spends trading here, the less likely it is going to break. Or at least that's how it feels to me. I could be absolutely wrong, but it just feels like something is keeping this from rolling over. And the only thing that could be would be buyers. Because when sellers are selling, Bitcoin is the perfect example of what happens when sellers are selling. It literally just pukes. So Bitcoin's back under Monday's low. The dollar is at this point trending as it's under last week's low. So here's your dollar. This was a huge level for the dollar to break below for us because we analyze price objectively. So it just makes it a whole lot easier Wait a minute. I screwed that totally up. I did not want it to be that level. It's all right. So yeah, for it just to break down into here yesterday and not break down, it was a little bit worrisome. Like, people were coming in here and scooping this up for the longs, because if you remember, last week's narrative on the dollar was a new bull or a hawk in the Fed is going to be bullish dollar. I didn't let that narrative change my bias, because my bias is derived by what price is doing objectively, and it has been trending down. So the new narrative did not change my bias. However, it obviously I could not ignore it, right? So for us, when the dollar got down into last week's low right in here, it was vitally important for this level to get broken, and then not only get broken, but hold under it. And it did here perfectly. You can see how it took it out yesterday morning during the London or the New York session open. And that was pretty much the low, right? That pretty much marked the low of day. I mean, it did make another lower low, but it was an insignificant low. Like, once you did this, that was the entirety of your down move for the rest of the day. And that's what we assumed would happen. Then price put in this chop sideways move here, but under the low. This is so important. If it can do that, then that literally means that your sellers are going to jump on it, right? Because it's objectively telling you, not only is it, not going back up, but it's consolidating those losses, that move. So this is a distribution look, not a consolidation look. And that's a good look. And now you're seeing downside continuation take off. So right here is also another large key level. That is monthly support. So until you close a monthly candle under this level, you don't have the breakdown yet. But being under last week's low, that's good enough evidence for us to maintain a bearish bias on the DXY, right? And we don't have to be a rocket scientist to figure out which way the dollar is going. We can absolutely look at it and know objectively what it's doing, where it's heading. Doesn't mean it will continue to do that, but it does mean that's the way we want to position. So we are short the dollar, and we will remain so. But this is a big level, and it could end up holding, but only time will tell if that happens or not. As of right now, this is a good look. This is what I would like to see, holding dollar shorts. Yeah. If this can close down in here somewhere or anywhere to make that breakdown be like the midpoint of that range of this specific candle, it would look like a legit breakdown, as that would be roughly around the midpoint. So I would love the next 4-hour period to open, retest this as resistance, and then fade. Literally, the way that we analyze price works with all markets, every one of them, because we're not looking at earnings, we're not looking at fundamentals, we're not looking at news cycles and what news is being released. We're just simply identifying objectively what price is doing, and then putting on positions to replicate what it's doing. So easy. It's so simple. Anybody can do it. To learn how to do this, anybody can manage their own money. It's the best strategy you're going to find on the interwebs. Good morning, traders, says Janet. Good morning, Janet. Thoughts on Euro USD? Oh, Danny, I will look at Euro USD real quick, but I just want to show you guys something that we did literally, or what we said on Thursday. somebody specifically asked me for here. I don't. Well, let me see. Give me 1 second. So the 9th. On the VIX for the rest of the day and the S&P, if you see like some kind of tragic breakdown there, you could see some more lows today. Be careful. Volatility is still expanding. Check pound dollar is testing the last 3-month high now. I'm watching the current 8-hour open. If it closes 15 minutes above it, is it entry? All right, let's pull up pound dollar. Cable. What I'll just pull up forex.com. That's I think that's who I use for brokerage. Okay, you specifically said what now? The 3-month high, the last 3-month high, right here, right now. Okay, I see what you're saying. All right, so it's also simply December's high, right? That's what I have labeled there. So that came in on the 24th of December. That puts this right here in January. So this line is your December high, and you're looking for what? The 8-hour open. If it closes 15 minutes above it, so the 8-hour open. Speed this up a little bit. So you want to see a 15-minute. So right now you still have a higher low. So I'm not sure if you're asking if it's a short or a long. It should be a long.
Oh, bullish entry.
Because
Perfect.
You're moving up.
So it could be. It's not like my favorite level to see those bulls step up would be January's open, because that's your yearly opening range. This would be ultimately my favorite place to see those bulls show back up again. If they show back up here at a higher price, yeah, that could be absolutely. It could be a long. You're actually seeing a lot more downside volatility today on the pound than you are on the euro, right? So I'm kind of curious as to why. Yeah, the pound is down pretty damn good today. Like, you're down almost 1%.
Move on.
Whereas the euro is just choppy and garbage range-bound day, right? So how would I trade this if I was going to buy this tomorrow? I probably would not be a buyer on it today, and I'll tell you why. It's too much momentum. It is still just testing the 21. It's the mid.
So anytime you're looking for a move to take place in your direction, you don't want to do that on a day when price is moving opposite to your bias with a lot of momentum, because that momentum can carry the day through. So even if people have a bullish bias, like we did have a bullish bias on the pound and we were setting up along here, but it was for the next day, the day that I would not be live for the public. Somebody specifically asked for a long setup on this, and that is what we did. We provided the long setup, the price to look for the long setup, and how to mitigate that risk even.
Point. So it's almost like a legit breakdown. But what I could do tomorrow for long entry opportunities is I could watch today's close and today's low. So tomorrow, if you're still interested in pound longs, you'll get a new daily candle today at 5 p.m. Eastern Standard Time. I don't know where you are in the world, but that will be a new daily open. If during the Asian session, you trade down into this low and then back up into this range, I would fire off a long.
That price is one spot, 35177.
There. And set my stop loss like 25, 30 pips under the entry. Because if it is going to be a trap, if this down move that you're seeing today is going to be a trap, then there's no point for price to trade under one spot, 35177.
Oh, I didn't know I said it.
Okay. So if it is a long, like if you were watching on the smaller time frame charts and you're looking for a long setup, what you want to see is this. You want to see price open a new daily range, head lower, right? Head lower, liquidate today's low wherever it ends up being, because this might not be the day low later on today.
It was the day
wherever
low.
The daily low is, it liquidates that. You want to see it immediately bounce back up into the range. Then you can hit the buy button, set a stop down here, because if it goes down,
yeah, if it continues to go down, it's not doing what we want it to do. So anyways, with that being said, let's go look at the pound dollar, because that was set up on Saturday. I'm sorry, on Thursday of last week. And the trade, this is that day. The trade literally did take place on Friday because there was too much downside momentum on Thursday. So here, if you go into the 30-minute time frame, you can see this is where we were right when we were doing the live stream. And basically I said, watch for price to trade lower, 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 liquidate. Then you hit the buy button right there, stop 30 pips, 25 pips under your entry, and then Bob's your uncle. And there you go. There it is. One spot, 35177. So it literally isn't that I'm calling for a reversal there or that I knew a reversal was coming there. I had no clue. But what looking at objective levels tells us is simple. If price is going to bounce from there, we want to see that bounce take place. If it does, that's where we want to put our long. So kudos to whoever asked to see that. And if they took the trade, kudos, because they're obviously up nicely. I mean, with a 20 pip stop, you could have put a 10 pip stop on that trade. And I mean, it moved real good. So right here is 8.9 pips. So from that low to that low is 8.9 pips. So a 10 pip stop would have been sufficient. Now, obviously, I can't see that. So it's better to have that wider stop, right? The 30 pip stop would have been the best stop. It would have nowhere, you would have not even been threatened even a little bit. This took less than 30 minutes to play out, 1 hour. And you knew you were pretty close to being right. That was the exact reaction you wanted to see. All right. Now, the reason I had a bullish bias on the pound is because I have a bearish bias on the dollar. And then also pound is going up. Like it's been trending up. We just saw a lot of momentum on that Thursday because there was a daily 21 exponential moving average right smack dab in the middle of the range. That is why you've seen so much volatility. Because you have buyers buying that area and then they're getting stopped out. This is why we don't use moving averages to put entries on. We use objective prices, not moving averages. Because price action will trade in and around, above and below that average to stop out as many people as possible. When the only trade to put on was to watch Thursday's low. Beautiful stuff. Very simple. Anybody can learn this. Anyways, moving on to your USD so I can analyze it for you specifically. We had a long bias on this as well. Obviously, I missed it. I missed it because I was waiting for it to retest the yearly opening range. Let's leave parity on, but let's get rid of this. All right, so basically I just want to get the yearly opening range up there because that's where I was looking for the trade. And that's my fault. I should have taken it. Obviously, I should have taken it. It literally did the same thing. Well, not really, right? So where's Thursday's low? I guess it set Thursday's low and then automatically started trading higher. 13, and then there, that's, so you did the same thing, right? This would have been the prior day low. That would have been your prior day low. Thursday's low, and then Friday's candle opened here. Liquidated Thursday's low, and then traded back up. Right here. Traded back up. So that would have been the buying opportunity. Now, what are we looking for moving forward? Well, obviously, now that you're trading back above the EMA, the 21 exponential, I mean, those moving averages look bullish to me. They're all in the right spots. But the only one we really need is this one for now, for this analysis. So here's that trap. That's that trap that I'm talking about. You closed under, so it definitely looked like it wanted to break down and continue lower. As with that fit the bullish dollar narrative with the new Fed chair, all that stuff. But we knew that we wanted to be long here as long as price rejected 1.17498, which is the yearly open. I was looking for price to go down and test that level. It didn't. And because it didn't, I didn't get long. So I missed out on this move. But I mean, I've caught the same move. It's just on a different pair. I'm short USD JPY instead of being long Euro USD. I would rather be long Euro USD instead of short USD JPY because Euro reflects or has more of a opposite correlation to the dollar than the USD JPY does. And also the JPY is still weak. You need the JPY to firm up to help USD JPY continue to go lower. Dollar weakness isn't enough because if the yen is weaker than the dollar, then USD JPY will still slowly chop higher. So Euro USD or Pound USD was the best two assets to look to focus on dollar short positioning. As far as moving forward on Euro USD longs, you're going to have to wait for a correction, or you're going to have to wait to look to buy day lows. Unfortunately, because Monday was such a large range, I never want to buy very shallow corrections. But, I mean, as of right now, today, that's all you have. So, you see what I'm saying? Like, I don't think the long is today. I think it might be tomorrow. I know saying that always sounds like I'm putting it off. It's just when you have a large move like this, a lot of times you'll either see upside continuation almost instantly, or it'll be a very small range day. And it appears today you're trading in as a very small range day. So you're not continuing up today. So with that being said, that means tomorrow the better opportunity would be to watch what happens down around today's low, wherever that may end up being. So it's still a little bit early in the New York session to assume, right, that this will be the low tomorrow. But if it is the low tomorrow, and as long as tomorrow's range opens right here's where your new day candle is going to open for tomorrow's range. If you're trading anywhere under, like where you're trading now, you're trading under that in this block area here, then I would pay attention to this level. And if you get a similar move, right, where you liquidate and then bounce back above it, then I could put longs on here. If you break below this and push deeper, then a deeper correction is wanted. And at that point, I don't have a great level to give you, right? Because that would literally screw up everything. The next liquidation point is all the way back down to here. So you may have to just, if it breaks below this and continues, you may have to let, like the London session, set the low of day. If you do get that, London session for me is 2 a.m. So if at 2 a.m. in tomorrow's range, Wednesday's range is, if you're trading near the low of day, during the London Open, you could, in a sense, fade that move. But just make sure you have a stop out, 20, 30 pips, because it could continue. It could be looking to go lower and liquidate what happened Monday. I don't think it should, or I don't think it will. Obviously, this is a pretty strong trend, right? So obviously, we do want to be looking for the upside. But if price continues to show weakness under 1.19068, then something else could be going on. Here's the thing. Yesterday, for the dollar, I don't know if let's go look and see if it's the same for the euro. It is. So yesterday's price action alone was larger than all week last week. That literally means in one day yesterday, you put in a bigger move than you did in 5 days last week. Last week was a very tight range. But still, yesterday was huge. The last week's high is there. If you get under here, then maybe watch last week's open. That would be what we would call like a weekly demand zone. So if you lose this level, the very next subjective level to look for entries is down here on Euro USD. And it's got to hold that level. Has to. Okay? That's what I would be looking for. I would look for positions down here or here. I probably wouldn't be able to take that trade today, though, unless it gets down here and immediately refuses to go lower. Then I could. And with the S&P 500 trending up, I see no reason why I couldn't be long euro dollar there. So maybe later on today you'll get the entry, or early tomorrow, either during Asian session or London session. Good morning, traders. Dollar down, stocks up, bad omen. Not really. I mean, that's typically what we used to love to see. Dollar weakness, stock strength. Assets higher when dollar goes lower. Usually fits the build. Bitcoin back up. So hype refusing to break down here. Oh, what am I doing? I want a daily. So I don't know why I have Monday of last week's. Oh, because that low was the next one to get, wasn't it? Okay. Yeah, I really need to see this thing break down below here. I don't like what it's doing here. It looks like it's trying to build in higher. It is building in higher low support. I mean, that's a lower low on the day, but you didn't close under it, right? So if you're just looking at your closes and not your wicks, you have built in higher low support. This would be the higher low support. If you look at it like a line chart, see here, that's a higher low. So obviously if you make a higher high, you could have a near-term reversal on your hands. So I definitely want to see that hold for short side continuation for a short trade. Yeah, it is vitally important that you guys learn how to mitigate risk and not try to predict what price will do, because you don't need to predict what price will do. If you can just simply learn to identify what it is doing objectively and then trade in that direction, but use manageable risk and manageable leverage, your accounts will grow. It's a proven fact. You're going to be wrong sometimes, obviously, because price is not predictable. That's why you have to use stops. It's chaotic, unpredictable. You could get reversals at weird places, right? But as long as you're following the trend and you're applying trend following strategies, you're going to make money long term. Because you're going to nail really good trends. You're going to get into trades sometimes that you can stay in for months. For instance, had you been short Bitcoin in October, there would be no reason to close that position. I still have my shorts on IBIT. I'm not closing it. Even though I think this could be the local low for a while, I'm still not closing it because there's still tons of risk out there. Tons of risk. We could see fresh lows. And those puts are up huge right now. And I still have a lot of time on them. I put them on for this entire year.
Yeah, it doesn't look great, but we'll see what it does at 67,293. If it can hold there, I think putting on longs right now is a little bit risky because the trend is still heavily to the downside. But looking for, near-term spikes or near-term reversals, that's where the risk has to, for me, it has to hold. All right, moving on. Dollar, read that. Please never speed up your voice again. Need that low and slow. Yeah, I speak very slow. In today's, with today's society, people usually like real quick, to the point, and fast stuff. But yeah, I was just trying to make a point and make it as quickly as possible. Generally, we're on the right side of the market, long term and short term. Generally speaking. Yeah. Yeah, I would love to see the VIX get back under 1721, which is 2025's open. But it really has to get back under 1485, which is this year's open, for me to feel safe, like risk on again. Let's go look at Bitcoin's volatility. I don't remember exactly which watch list I put that in. Let's see if it's here. Yeah, there we go. I don't think this is the right one. Oh, it is. Wow. It did make it up there. Yeah, you can see, like, these wicks. You don't really see this thing trend ever, right? It's an oscillator, so it doesn't trend. But still, vol sellers love to sell vol. That's what they do for a living. So when you have increased volatility, it's time for them to go to work. And they've done their job. They have done their job. Very seldom do you get trend continuation moves. You do, you can. Like, here's a period where you did, right? You did get 3 weeks of upside expansion on this volatility metric. 2 weeks of upside last week was that sort of like blow off style move. So as long as BVol stays under 480, I think your local low is probably close to being in, at least for the next few weeks. Probably going to do a lot of sideways trading here. If I had to make a guess, and I do. So yeah, down here I think will be the best place to put that risk back on. So we'll see if we can get that move today. I love hearing you guys say stuff like that, though. It makes me feel better about myself. Really gives me an ego boost. I appreciate it. Keep it coming. Good morning, Heath. Glad I'm catching the live today. I'm glad you're catching it as well, Chase. I'm looking for a short. Oh, you're looking for short for Euro USD. Last month closed below. Okay. All right, let's go back to Euro USD and analyze this thing objectively. Okay. So near term, I'm always wondering what it's doing when it comes to the 21. You're closing days above it. And there's, obviously the euro dollar or euro is not like a heavily bullish asset, but because it's so heavily tied to the DXY basket, it trades inversely to it. So we might not be seeing euro strength here. We might just be seeing this as a product of dollar weakness. You know what I mean? But I agree. If you look at this thing long term, it's a piece of garbage. It
long term, like, has a very, very long term lower trend. And you are getting pretty extended up here. So I understand why you would like the short. However, where I would argue with your short side thesis is the near term trend is up, right? Last year, up. This year, up. So at least on the near term, the pressure is up. Order flow is bullish, not bearish. Regardless of what you think it should be doing, order flow is telling you you're wrong. At least here, right now. So where could you, in theory, start looking for shorts? For me, it would have to be under the open of this month. I couldn't short it anywhere above the open of this month. Okay? Because you've already liquidated this swing. Let's see if last month closed relatively strong. Did it close relatively strong? It did. Did it close above its midpoint? It did. So it closed relatively strong. And this month you're seeing upside continuation. So I wouldn't want to try to fight that order flow. Also, you have a long-term breakout here happening. So if you look at, like, I'm not a pattern trader, but there are a lot of very successful pattern traders out there. This is a freaking bull flag if I've ever seen one. And you are currently breaking out of the top of it. So you could literally see an expansion that takes place that looks like this. I'm not saying you will, okay? Don't get me wrong. I'm not saying that you will, but a measured move on something like this would look like this. Right? A measured move on what you have here in terms of patterns puts you up to 127. Okay? Now, order flow is obviously bullish. The bulls obviously have momentum. But right here is when you should have seen the breakdown occur on the euro. The bears should have had it right here. Instead, what happened? Kaboom. This is a short squeeze. This candle right here told the bears, or at least the professional bears, they are wrong. They are wrong. So this large expanding candle is literally those bears being wrong and understanding that they're wrong. So first, you're stopping out a lot of bears that don't want to agree, right? So those people are getting stopped out. That's pulling in more bullish order flow. To get out of a short, you must buy back into the market. So that brings in short side covering, bullish demand. And then on top of that, you have the bears from up here that are just saying, well, never mind. If we're going to force push above this, then I know I'm wrong. I'm getting out. So then all these bears start to liquidate their positions. That puts in more bullish demand. The order flow is clearly and obviously bullish. Looking for shorts, in my opinion, is the wrong side of the market. But it is only my opinion. This thing could roll over and die tomorrow, right? I don't know what's going to happen with it. But objectively speaking, I think you're on the wrong side of the market looking for shorts. So if you want me to identify a short side setup for you, I can't. Unless you're below the February open. I can't give you a short side setup. There isn't one here. There might be one up into here, but there really isn't one right here. You do have an objective level being September's high, so you could mitigate risk against that level if you wanted to. But I wouldn't. So if you're looking for shorts, right here is where you'd be operating. So yeah, you would be operating right here. You would be putting short trades on at one spot, 19188, with a stop loss about 25, 30 pips, and just hold it and see what happens. You could be right. I don't know what price is going to do. I have no clue what price is going to do. My job is to mitigate risk. And as of right now, I would not be taking that trade. You can, though. It is an objective level. So it is a 50-50 shot which way it goes from here. Because traders operate on probabilities. And this 50-50, whether it goes up or whether it goes down, it's a 50-50 shot. Even knowing the objective analysis, it's still a 50-50 shot. So you could be right. You are also overbought on the 4 hour, but you just had a nice corrective pullback here. I mean, everything about this tells us to be bullish, not bearish. Everything about it. I mean, look at that beautiful 50 test. Boom. So clearly getting long here was the right trade. But yeah, September's high. Watch that. If you're trading above September's high, the very next level to look out for is going to be last month's high. Up there. So you can't really be looking for shorts anywhere above September's high. But you could look for shorts theoretically above January's high, right? So this will be your first opportunity for that short to play out. I strongly recommend that. I mean, I don't like it, but you can take it for sure. It is your money. I have been wrong before. Trend trading doesn't always work. And the best way to bring that up is just to show USDJPY. Because I was looking for the trend following trade in 2025 against this. Because the first several months were a downtrend. Then we built in this very long bear trap or bear flag, right? So what I was looking for was a liquidation above the high, the range, and then I got short. And then look what happened. I got stopped out. So this was 1 year where the yearly trend did not recover. The yearly trend was clearly down, and trades, the bearish, were looking for the bottom of that range to break down, similar to what we have happening right now on the dollar. It didn't happen. So very much early here. Very much. Now it looks like we've got it, but it's a new year, new trend. So we'll see. We'll see. New year, new trend. This could end up being the yearly low for USDJPY. Only time will tell us what's right or wrong. There are some macro analysts that I listen to who think that there is still plenty of room for USDJPY to go higher. Right? I think you're seeing a carry trade unwind occur. I think if anybody that's long USDJPY via the carry trade, they know that the Fed and the BOJ will intervene. So just think about that in terms of managing billions of dollars. You've had the carry trade on since 2021, and your position is huge. It is massive because you run a fund that has billions in it. So you've been on the right side of the market, but now you know, right, that 160 and above, not only will the BOJ intervene, but the Fed will too, because they started to test liquidity. They started getting price checks. That is, in a sense, an intervention. It's not an intervention via capital inflow, but it is an intervention. It's them telling the free market that we will get involved if we have to, right? So if I'm managing billions of dollars and I hear the Fed say that, or not the Fed, but the Treasury, right? It was the Treasury. I hear the Treasury say, if it keeps going up, we will intervene, and so will the BOJ. I'm bailing. I'm getting out of that position. I have squeezed that lemon for all it is worth. In a sense, I'm bailing. Now, does that mean that's what's happening? No. But that's what I would be doing. That doesn't necessarily mean I would be taking the short side of that trade, being a manager of billions of dollars. But at the same time, I definitely would be getting out of a trade that has worked literally from 106. Now I'm up at 160, knowing that there's only $4 of potential on that's even left on this before you start seeing central banks intervention. So you're probably going to see more dollar weakness in the long run based on that and that alone. I'm not a $1 billion hedge fund manager, so I have a much smaller book. I can short this based on that. And so far it is working. It may not continue to work for a long time, but at least right now it is absolutely working. And so far in 2026, we have a high and we had a low. We've made a fresh lower low, and then another fresh lower low, and then another fresh lower low. Then we had a retracement, thus making a lower high. So now all I need for my trend, or at least my trade thesis, to be correct is another fresh lower low. If I get that, I can take profits and bail, and then, assess in the future as to what may be taking place. But at least as of right now, until you make a higher yearly high, which is up here, it does feel as if though this thing has topped. But I thought it had already topped a long time ago, and I was wrong. So objective analysis has its drawbacks. But as long as you're good at managing risk, you will make money long term. You absolutely will, because you will catch long-term trends. So Bitcoin refusing to go down to 67,293 here. It's also putting a burden on that hype USDT short. Let's go see what gold is doing. So yeah, I mean, even though dollar is weak today, gold is struggling to break out here. So there is a lot of pressure on gold. A lot of sell side pressure is on gold. It's not, you haven't seen it break down yet, but it's starting to feel more and more like it's struggling. In fact, to be honest with you, a 4-hour resistance test would have been a beautiful entry. It's just, I can't, not with this much dollar weakness, I can't really have that gold short on. But if it continues to do this for the next few days, I probably will put that short side trade back on. I think it's a little bit early here, but if we see it cut loose to the downside, even with dollar weakness, then yeah, I would look for the continuation move. In theory, we could put on a position here, as you are testing 4-hour supply right now. Let's see what we got here. Okay, so if it can push up to here and fail, I'll put on a short on gold. So let's get it pulled up. Let's get it pulled up. Yeah, see, it's still a little bit bullish on the near term. So me taking the short is counter trend and dollar's weak. So we got to be careful. I mean, this is a very risky trade because bulls could be buying this right now. It is a support test. But here, I mean, this is, let me go back down here because this time, you see the date and time on the bottom of my crosshair right down here is not accurate. So for that, I got to go down here. I've put that on New York. I've put it on a million times. For whatever reason, it just will not get accurate with this. So this is just better. But if we look at this, this has traded all weekend. So here's Sunday, then here's Saturday. So here's Friday, Saturday, it trended up. Sunday, it trended up. Monday, up. And then it failed. Another 4-hour supply zone. It failed here. Downside move. Resistance test and a bearish reaction. So it does look like, for right now anyways, because that could change any minute. This thing could get some bullish momentum. So with that being said, if it can fail at 50.23, I could put risk on. I don't want to put risk on down here. It's directly into support here. So it's not a great setup. So maybe there's only 25 minutes left on this candle. It is a bearish engulfing. Maybe in the next candle, the next 4 hours, if you could trade up to here and fail, that would be a better place to put risk on. So we'll see what it does. I don't really want to put a short on right here, right now, because just a bounce back up to resistance would be enough to stop that trade out. So it just doesn't make sense to put it on. You are obviously in the support here. A breakdown would feel a lot better if it could break down, give us that push, and then slowly come back up. Then we could look to put risk on here for the larger secondary leg lower. It's the dollar weakness. If you took that out, I would absolutely have already been looking for a short on gold, because I honestly believe you're seeing a lot of selling here, not buying. I mean, you probably are seeing a lot of buying, but I mean, I would say the big money, big money, they are smelling that this is probably pretty close to done for at least a little while, as this trend got severely overbought, and it was severely overbought for a long time. Also, if we fib this range, you're right into the midpoint of all that. So new shorts jumping on, and then other people just that did not sell on the first initial down move, they're going to sell up here on the bounce. They're going to distribute all those long-term longs. But if central banks and all that keep buying gold like they did in 2024 and 2025, this thing could go up. Usually when you see big blow off moves like that, it's pretty much done. We're starting to see that move happen now, so not shorting here is probably going to be a bad idea. But I just can't do it. I can't sell. I can't short into support. We need a pullback, then we can short it. We want to manage risk the right way, right? Don't want to just take trades because we don't want to miss a move. You're always going to miss moves. Greetings, everyone, says Tank. Greetings, Tank. So we're looking for gold shorts. If we can get a pullback Let's put an alert here. Let's go see what ZEC is doing. So ZEC is also failing to break out, but still, it also got a little bit overcooked to the downside as well. Hitting overbought on the daily. I mean, oversold. But it is a fresh breakdown. I think a deeper correction, I could look for fresh shorts, but not here. And obviously, FART just been squeezed. And Bitcoin's back to up. So Bitcoin's actually refusing to go lower after just liquidating yesterday's low. Now, that's pretty good news, or at least it's a good reaction here on the near term. Obviously, I don't know if you're going to see any trending move out of this, but at least for the near term, that's what I would want to see with dollar weakness. I took a short on silver at 83.15. Let me go look at silver. Wait, let's look at silver on an exchange that provides volumes. Volatility is still way up on this. So yeah, you're seeing deltas here be neutral, but it's what price is doing that's telling the story here. It's a lower high. And you said you shorted it at 86 or 83.15. So let's go down even smaller here on the intraday. 83.15, right about here. Damn it. That was a good short. It was a good short. Daily res, I mean, close to daily res. Close to a supply zone, being if you use this entire candle's range as supply, it is supply. So not bad. Looking for shorts anywhere in this gray zone is okay. Yeah, I mean, I don't see no reason to close that position, my bro. Leave it open. Here's the thing, with dollar weakness, it could spike, right? It could spike up. It could find support down here anytime and spike. And the bulls are, I mean, they're not in control of it, but they are more aggressive today, according to deltas. At any time, I mean, it's so close, I wouldn't even worry about that. Yeah, session volume profile looks good as you're starting to trade away from it. Let me make sure. That just does not look like 70%. It isn't. Wait. It isn't. Well, 68% is actually what it should be, but that's better. It's a little wider at least, but yeah, if price can continue to trade away from the point of control and the opposite direction, I would not close the position. You're in good shape here. It is moving away from your entry. That's always what you want to see as a trader. I don't know that you're going to get a large trending move to the downside, but it could if it starts to get frothy. You know what I mean? If it starts to smoke a lot of stops, it could really get some steam to the downside as those forced liquidations come in. Remember, people trading these things on crypto exchanges are using crazy, insane leverages like 200, 300x. Once those forced liquidations start, that could literally propel this thing much lower. It's the dollar weakness, the extreme dollar weakness today that's got me a little bit worried for the sell side on gold and silver. But I think you are seeing more distribution than accumulation. I think the move on silver's done. I think that was a blow off top. That is a massive move. 39% in the span of just a few days. Like, damn, bro. That's pretty much toast. I don't know how low it'll go. That was a big move. So you could spend the next year filling in this entire range. I think price is going to slow down. The ranges are going to get smaller and smaller. We have an indicator right here that we can see that volatility is still pinned to the roof. So as of right now, you could still see larger ranges, but this is an oscillator just like everything else. Vol sellers are a real thing. So eventually this will oscillate and start to head back towards the downside. When that happens, your ranges are going to get much, much smaller. So make sure you're taking profits on the moves when you're right. The next obvious level of potential support is going to be right here. At least on the very near term, on the 30-minute, see on the 4-hour, you're even starting to slow down here. On the hourly, you're on the lows. I wouldn't anticipate anything like this, because when that happens, you get these ginormous ranges. But yeah, I like your trade. Hold it. Keep holding it. I think you're on the right side of it for at least right now. Make sure you have a profit target though. I wouldn't look for it to go back to any crazy prices. Dollar's getting absolutely hammered. Or at least dollar versus yen. So maybe that means we're starting to see could be seeing yen strength. Yeah, yen is the strongest asset today in terms of currencies. Yen is absolutely the strongest currency today. It's up damn near 1%. That's why USD JPY is coming off so hard. DXY is actually still testing monthly support. Still testing monthly support here. This yen is what's causing USD JPY to look so good. This could ultimately put pressure on stocks if it continues to do that. If that continues, it could literally put the pressure on the stocks. But look at Nvidia rejecting yearly open again. That was such an aggressive bounce, man. It doesn't make sense to me that it's already back to doing this. It seemed like to me it was heading for 194. But maybe this was just some kind of news or something. It felt like it was capitulating. And it shouldn't have capitulated just right here. That was a gigantic move. I think you'll see upside continuation from that. But only time will tell. You're in a long-term range on Nvidia, so it's going to be very choppy until you get some kind of resolution. Tesla is testing the levels we thought it would be testing. Yeah, they're perfect. They're right in the right spot. So you have Wednesday's high here. Yeah, you'd be hard pressed to get me to sell this right here, but it could be a near-term short scalp based on a rejection on the weekly 21 if it does reject the weekly 21. So basically, I'd want to see this high, today's high, stay intact, or at a very minimum get rejected if it liquidates it one more time. But don't have any objective levels. You're above last month's open. So when you're above this month's open, it makes it a very difficult short, because right now you're very much bullish. Very much up on the month, but it could reject. It isn't right now. So it's still a little bit risky of a short. Damn, it can't break down. That's a little bit worrisome. Greetings. How do you see the leverage on ETH and BTC? What do you mean? How do you see the leverage? Are you talking open interest, or are you talking like, are you wanting to put leverage on a trade? I'm not quite sure what you mean. But leverage is... I don't think you can see leverage as far as... I mean, you can look at this indicator here, or I thought I had it. Let me get it right here. So you can look at this liquidation map, will show you Binance leverage. So like anything yellow and orange is the 150x leverage positions. And as you can see, there are a lot of 150x leverage shorts here today on Bitcoin. So if I wanted to look at ETH, I would just pull up ETH. Huh. Maybe I can't. There we go. Binance, ETH, USDT, perpetual swap contracts. I'm not logged in, of course. Ugh. So it won't give me this info. But how can you tell when there's a lot of leverage on an asset? Well, this is one way to do that. Like I said, I can't do it because I'm not logged in, but we can look at BTC's leverage on Binance, and that tells us that there are a lot of levered traders right here, right next to to where price is trading. And then you can look at open interest, futures open interest right here. Not necessarily options open interest, but yeah, I mean, that's what this is showing you right here. Leverage. 10x, 25x, 50x, and 100x leverage. And then you can go out further in time too, where you're not just looking at the daily. And this is all exchanges. So this isn't really showing you that the leverage is high. This doesn't show you that. This is just open interest, right? So clearly there's more shorts to be liquidated up to 70K than there are longs to liquidate down to like 67. So it looks like the near-term pressure, the very near-term pressure is right next to the where you're trading, but the pressure is definitely looking for an up move here for more liquidations. There's more short sellers happen like today than there are buyers, is what that would indicate. So if price does start to go up, which it is kind of doing here, once it starts liquidating all of these traders, you could see a bigger spike. So we do think that's the way it's going to go based on what the dollar's doing today. And risk markets are bullish too. So, I mean, you got full on bullish risk on feel in the markets. Even oil is pulling back. So there is a risk on feel today. Let's go look at our ratios. I haven't looked at them in a couple weeks. See how people are positioning themselves anyways. So this isn't that great. This looks like people are pulling money out of tech, running to XLP. But tech isn't down that bad, right? It's sideways. But so what you're probably seeing is more positioning in XLP instead. Yeah, XLP is rocking and rolling to the upside. So a lot of people going into consumer staples. Here's growth versus value. So SCHG is a growth ETF. VTV is the value ETF. So whenever we see this happening, that does smell like people are pulling risk off, or at least they're rotating capital into more safer assets, as generally people will fly or they will rotate into value in times of like chaotic, right? Whenever there's chaotic times or whatever, like people are just rotating they're taking profits out of the high growth, high beta movers, rotating that money into slower moving things, or things that do good in recessionary or inflationary times. We're not seeing any evidence of a recession or any evidence of higher inflation. So this is just defensive positioning is what this looks like. But with that being said, the S&P is still at all-time highs. So even though you're seeing this capital rotation, you're not seeing that translated in the S&P charts yet. You could, but yeah, this looks very not good. And then this is tech versus energy. We did see a spike in energy lately. In oil, we did see that. And you're only pulling back on the very near term on oil. Oil is actually making higher highs and higher lows. So Yeah, that's also inflationary or recessionary. Consumer staples versus SPY. Big spike here on XLE versus SPY. That's energy versus the S&P. We want to see this trending down. It looks like you have put in a reversal here. So we are seeing defensive positioning across the board. But just not so much on this. But because of that defensive positioning, that's literally what's keeping this from breaking out. So we're sitting here wondering today, why is the S&P struggling to break out? Well, that's why. That is why. We're seeing a flight out of the riskier assets going into the safer assets. So IWM is actually pushing here. It isn't breaking out either, but it's above where it was last week. That, I mean, I don't like IWM for that, but yeah, I'm definitely concerned for the SPY. Seeing that heavy flight of capital out of high beta stocks into the more safer value plays is kind of concerning. I don't know why this hasn't broken down yet, to be honest with you. So like if we compare this, let's go do this real quick. Let's turn this into a line chart. Okay, this is growth versus value. We're also going to compare the SPY or the SPX new price scale, S&P 500. But we want this to be a different color. We want this, we'll have this be red. And then Bitcoin as gold. It's more orange than gold, but whatever. And then finally, let's do the Qs. And we want that one to be yellow. So we're comparing these to the blue, right? So let's go back just to the bear market of 2022. So Bitcoin actually started to pull back before growth versus value, right? Alt B. So that actually catches the peak of Bitcoin. Orange is Bitcoin. So the peak of Bitcoin actually happened before you started to see assets or value roll out of growth, right? You started to see money roll out of growth into value. So Bitcoin actually called that. And then red is the S&P. S&P then started to follow, but it took it a lot longer. So let's see, how many weeks is this? 1, 2, 3, 4, 5, 6, 7 weeks. 7 weeks. Let's get rid of the Qs. I don't care about that. We got gold versus or Bitcoin versus S&P and then value. So 7 weeks, this blue line started to roll over before the S&P ultimately did. Now that's the 2022 bear market. So even here, back in July of 2023, small dip, but it started before the S&P did. And of course, the yen carry trade unwind, or actually just the bear market that we had at the beginning of 2025. Same thing. This started to roll over before the S&P did. So this has already started to roll over. Let's count 1, 2, wait. So yeah, I mean, it's weird because Bitcoin started to fall first, right? Which makes sense. It does. It historically does do that. Then growth and value started to fall. But this hasn't fallen yet. Now, that doesn't mean it will fall, right? There are things that are changing inside of the world economics, so maybe, but still, historically, you kind of want to pull risk off when that's happening. Bitcoin's already a leading indicator. It's already telling us that we could see a broader market-wide pullback here. And according to growth and value, growth versus value, it's saying the same thing. So the S&P pullback could be on its way. I don't know. I don't know what's going on, but anytime I see this, I have to be very, very cautiously risk on. Very cautiously risk on, with also starting to put those bearish hedges on, right? We should literally be hedging off this risk. Now, with that being said, could we look to attack that market in a market that's or like look to attack the S&P in a market that's already seeing a pretty decent pullback? Well, I thought we were seeing that last week in Nvidia. So the fact that it had this huge, strong comeback here kind of made me feel as if though, like, well, maybe it isn't going to be risk off, but it does look like it. Looking at the ratios, it looks like we should be positioning ourselves for a move lower on the S&P. But here's the thing, catching that has proved difficult. These are weekly candles. And growth versus value has been pulling back for some time now. Not quite in October, but it started in November. It's already pulling back. That's why this is like refusing to break out. This thing could fall off a cliff any minute now. So this is the level to look for risk on this asset. For right now, yeah, I mean, everything is right here. That's January's high. If the S&P fails to put in higher highs and higher lows above January's high, I'm going to start looking for risk-off trades just because this is a very tight range. Oh, and it liquidated the bottom side of the range. So liquidation on the top side of the range and then a drop would be brutal. Couple that with the fact that the VIX is closing higher lows on the weeklies. Higher close, higher close, higher close, higher close. It feels like something's coming. It feels like a bigger move is coming in the risk markets. It literally does. All right, so we got a 4-hour close on gold. So now any pullbacks into this area would be, if it holds as resistance, a potential short side setup. That is a good close. That's what we wanted to see. It closed below support. So it'd be nice if it could come up here first and fill us on a short before it rolls over. I mean, see if there, yesterday you could not put on a big enough position on the risk markets to even worry about a short on the SPY. What's the max position size? 14. So it is a little bit bigger than what you could do yesterday. Yesterday you could only do 9. Today you can do 14 contracts. Yeah, I don't know. I think I would wait for the liquidation on S&P first. We don't know that it is going to roll over. Like I said, we are seeing some things bifurcate, or at least we're seeing some things change around a little bit. So maybe it isn't going to fall over, but this is a broadening wedge. That generally isn't very good. I can't remember when the last time the S&P put in a broadening wedge. I guess it did back here. Boom. But that was based on, there was some economics that right now the macro doesn't really support a bear market. With that being said, I gotta wonder why so many people are running out of value or running to value. I have to wonder. This thing could fall off a cliff. I don't know that it would, but we'll see. Probably could start putting on some way out of the money put trades. We did put on, I got filled on Netflix yesterday. It was trading down into here yesterday. I got filled on that, but now seeing everybody rotating from growth to value makes me kind of concerned. But Netflix getting a nice little pop today. So yesterday we put risk on it here. We bought it right in here around this low. So it is starting to go. What? That position's up okay today. So what if that growth versus value comes back though, right? Think about that too. Don't just go put on big, huge downside trades on the S&P today because of that value, because of that one chart. Because what if that bottoms? What if this is bottomed? It doesn't look like it has, but what if it has? If this thing starts to trend back to the upside, that could absolutely help propel the S&P back to all-time highs and beyond. I think if it makes fresh all-time highs and refuses to trend, I think that would be good enough for me to put some risk on to the downside back on the S&P. I don't have any risk on, or risk, I haven't got any downside trades open on the SPOOs right now. But I could put some on once it fails at the highs, if it fails at the highs. Like by putting on a way out of the money long-term put. So what would that be? Let's go look at the ranges again on the SPY. So November's low is 651. Let's go out to December. 651. Buy that one. 651, and then sell this one. Yeah, I could put on a trade like that, but damn, you would need a huge drop. You could put on a spread, like you could buy the 651 strike and sell the 631. That would give you a $20 wide spread. And then if you did see a nasty drop on this, it would be a decent risk to reward. It would cost 423 to put that trade on, and max profit would be $1,500. So that's a 3-to-1 risk to reward. However, you would need a bear market. Let's see, where is 20% off? Oh wow, you would not need a bear market. Yeah, 631. That's not a bad risk. That's not a bad trade to put on. In theory, you would just need like an 11% dip to get paid out on that trade. Maybe. It's got to reject those highs first. January's highs. If it can reject that, then maybe. But now gold is starting to come back for us. This is what we want to see. We want to see it trade up to here and reject. Beautiful. I don't know that you're going to get that. Oof. Come on, push back up to here, please. Come on up. You can do it. Come on, you can do it. I mean, this is on a day when the dollar's weak. Not the best trade idea. It's risky. So what would I need? At least if I could get that 508. I'm gonna set a limit sell at 508 on gold. But on the weeks platform here, we're gonna sell 5008. We're gonna do that with about 800. It's a little bit lower than I want it to be. It looks like a support test. I don't love this trade. Yeah, I mean, you've done nothing here to suggest that it's weak. You did break down below support, but that might not be enough. It got to get filled first, though. So you can trade this with big size. You can... It says the max is... Well, I don't know what the max is. Come on, get up there. Fill me. You know you want to. Thoughts on Circle, value or headed for more hurt? While we're waiting to get filled on the gold short, let's go look at Circle. Well, I mean, it's cheaper than it's ever been. This is going to be being beat up because of Bitcoin. There's your IPO price. It doesn't look good. It does not look good. I mean, it's not even oversold yet. Not even oversold yet. However, you're taking out last week's high right now. So that's a good look, right? Now we don't want to see it just fail here and then roll back over. We don't want to see that. But basically, if it could hold last week's close on a weekly closing basis, then maybe I could buy it. But if you close a week under this, then it hasn't reversed yet. You did hit oversold a couple times on the daily, but that doesn't mean anything. It is cheap down here at $50. It's cheaper than it's ever been. I don't love an asset that goes from $300 down to $50 though. I have to ask myself why. Why did it go? I mean, obviously the hype is what drove it up, right? The hype is done. So now you just got to allow time to take place and allow the free market to work. When traders or investors start to feel like this has achieved value, it will build in a longer term support. Allow that longer term support to build in. It started to build that support in December, but then it lost it, similar to Bitcoin. So obviously people are trading this the same way they're trading Bitcoin right now. So when Bitcoin bottoms, there's a pretty good chance you could say that Circle has too. Freaking gold, man. It isn't going to fill me even just right there. This is what I was looking for right there. So it did tag that already. Yeah, I would have got filled on that. I just got it out there a little bit late. That's all right. If I miss it today, I'll get it later. I'll get it later. I'll get it lower and I'll get it later. I don't need to rush into this thing, that's for sure. So yeah, I mean, I don't know why it's trading the same as Bitcoin, but to me it feels like it needs to put in some kind of a floor and prove that it's a floor. But we can pull up we can pull up an analyst rating on this. Out of 28 analysts, 11 say it's a strong buy, 2 say it's a buy, 14 say hold it if you got it, and then there's one lowly bear down here all by theirself, just sitting down there. It's like, dude, you've already squeezed out so much of that asset's value. You honestly think it's going lower? Come on. I mean, it could, but in terms of probability, this person is wrong. Yeah, I mean, a lot of people think it's a buy down here. I don't know if they're going to be right or not, but things like that is really all you can do to assess if it's valuable or at a value area or not. It is definitely cheap, or cheaper than it was, because it used to be that much. So price is literally 80% off down here. So if you were wanting to buy Circle, if Circle was something you needed, buying it when it's 80% off it makes the best sense. I would rather buy something that's on sale than buy something that isn't. And it's on sale right now. I know nothing about their business model. So I'd want to look into that a little bit before I were to buy any of this stuff. But just looking at the chart, it looks like garbage. Could be in. The lows could be in. It could be in. You're also testing the February open right now, so that's a resistance level. It is a higher high. That's a good sign. It needs to be able to at least stay in the range. You don't want to see any lower lows under this low. If it can do that for a little bit of time, I think ultimately it would probably find support and then start to move higher. Like a bigger move is coming in. It ain't up. I don't know what you're talking about, Wes. Unless you're just answering that guy, the question for Cabby. Thoughts on Circle. I wouldn't say a bigger move is coming to the downside. I don't know what they do, but if they make money. So when you're thinking of investing, you got to think of investing in terms of a probability curve. Okay? As a probability, a bell curve. Okay? Everything that happens inside of the bell. This is a bell curve, right? A rather crude one, but it is one nonetheless. So this is where we want to operate as traders. We want to operate inside of this. So if you look at it, this is the downside. And then this is the upside. Right? What Circle has done, it's down in here. So you could be a seller on Circle right here. But you're literally so far out here on the probability curve to be right. It's insane. Like as a casino, I would take this trade with you every time. Every single time I would give it to you. And then again, when you try to sell it again and again and again, I would continue to do it because as long as you're doing that, you're operating in here. And that means I'm operating over here. So if this is like 4%, this is like 96%. So the move has already happened to the downside. So in terms of looking for far bigger moves lower, you're in terms of a probability curve, you're so far on the outside of that. That doesn't mean you won't be right. You could literally short Circle right here and Circle could dump down to 40 or 30 bucks, right? And then you would make money. However, if you do that same thing out of 100 times in the future, you're only going to hit a few of them. And the large majority of those entries are going to be losses. So that's essentially what you're doing here, trying to predict a much larger move lower. You're so far out on that probability skew that I would give you the money to put that trade on every single time. Because I know that long term I would make money. It is massively overcooked. Now, selling it in December was a good trade. It worked. Selling it up here was even a good trade. It worked. But you're 80% off. Is Circle really worth nothing? Is it really worth nothing? I don't know. You would have to Google. Find out if they make money or not. Let's go see if they make money. We can find out real quick. We can pull them up on Fizbit. FinViz, it's a free site. Type in CRCL. a free site, but you're going to have to deal with this garbage. Pop-ups, pop-ups. It doesn't even tell you if they make money or not. It's a fairly new asset, so I don't know. Compass Point upgraded it from sell to neutral. Whoever that is, underperformed. So they downgraded it, or upgraded it, from underperformed to neutral. You've got Morgan Stanley equal weighting. They've done nothing. Some people are starting to change their stance on it, but not many. There's no forward PEs. There's nothing here. There's not enough data. Oh, let's ask Grok. Sorry, Grok, I'm not yelling at you. Publicly traded as Circle Internet Group, CRCL, does make money, and quite profitably in recent periods. Circle's primary revenue comes from interest earned on the reserves backing its USDC stablecoin. These reserves, mostly US Treasuries and cash equivalents, generate yield while USDC holders don't receive that interest. This reserve income accounts for the vast majority of their revenue, often 99% plus historically. So recent financial highlights as of late 2025, early 2026, in Q3 2025, total revenue and reserve income $740 million. That is up 66% year over year. So USDC in circulation, 73.7 billion. That's also up 100% year over year. So that's good. So they're getting more and more customers, and each time they get customers, that adds to their profit margin. So their company is growing, profit margins are growing. Net income, $214 million. That's up 202% year over year, including some one-time benefits like tax credits and debt fair value changes. Their adjusted EBITDA, $166 million, up 78% year over year. Full year 2024 pre-IPO context. Revenue approximately $1.68 billion. Net income around $156 million. Okay, trailing 12 months. Figures around early 2026 show revenue over $2.4 billion with ongoing growth driven by rising USDC adoption. The business model scales well with higher USD circulation and interest rates, though it's sensitive to Fed rate changes and distribution costs to partners like Coinbase. They've reported consistent profitability on adjusted metrics in recent years, with strong growth in 2025 quarters despite some stock volatility post-IPO. Overall, Circle is profitable and has been expanding rapidly as stablecoin usage grows. Their latest full year 2025 results were scheduled for release in late February 2026. But based on Q3 momentum, the trend points to continued profitability. So at this point, the downside move that you're seeing in Circle is not only probably overdone, it's probably done. I don't know though. You would have to see what the forward PE looks is, and once you can get a number on that, once analysts or once investors, once this reaches that parity level, that's when the low will be in. I don't know where that parity level is, but it's a very easily mitigated risk. Simple, right? Don't put any leverage on it and buy it, a few shares, when it's trading on weekly lows, not on weekly highs. Right now you're trading on weekly highs today, right? If you look at a weekly candle, you're trading on the highs. So you don't want to add to the position then. You want to wait till it's closer to the lows. So whenever it's trading like with a red weekly candle, and near range lows. So moving forward, that would be around $55 per share. You would add slowly, small, pick up a few shares, pick up a few shares, pick up a few shares. And then over time, when it ultimately does hit that parity level, that's where it will stop going down. I just don't know where that is. I can't make a fair. Let's ask Grok if that would be, if, does it seem like these current prices is value? This puts pre-market cap roughly at 14 to 15 billion. Whether these levels represent value, undervalued with upside potential, is subjective and depends on your time horizon, risk tolerance, and views on stablecoin growth, interest rates. Here's a balanced breakdown based on current data. The key valuation metrics is early February 2026, price $60, down sharply from the peak of $299, but up from recent lows around 50. Market cap is 14 billion. The PE ratio is negative 17 to 26 due to reported losses on non-GAAP adjustments. Forward estimates vary widely. Forward estimate is around 60 to 70 based on analyst expectations for profitability ramp up. Bull case for value, strong fundamentals and growth momentum. USDC circulation 70 ups. Okay, we read all that already. In some models, many see fair value well above current 145 in some models, with structural tailwinds from blockchain stablecoin adoption. Adoption obviously is happening as they are growing, and they're up. The growth is up year over year. Some investors are adding shares. View the pullback as a buying opportunity. One analyst called it compelling risk/reward below 60 for long-term holders. Fed rate cuts are pressuring reserve yields. This is the bear case. Headwinds expected drop from 4% to lower levels, potentially compressing margins. USDC growth has slowed slightly lately, and competition tether new entrants could cap upside. Some DCF models peg fair value lower than $34. That is, if growth is only 15 to 20% annually from this point moving forward. We know that they can do that. They have done that in the past. Volatility and premium pricing. Stock has been hammered post-IPO highs, trading at a premium to some peers on sales multiples. Insider selling and mixed ratings suggest caution. Near-term earnings, Q4 expected late February 2026, could disappoint if rates bite harder. Negative trailing earnings and sensitivity to macro rates, crypto sentiment make it speculative, not a classic value stock like a mature dividend payer. Bottom line, at current $60 levels, it does look like decent value to many growth-oriented investors, especially if you believe in USDC's long-term dominance and Circle's profitability scaling. The wide gap to analyst targets and some undervalued narratives support that view. However, it's far from a slam dunk bargain due to execution risks, rate sensitivity, and crypto volatility. Consensus leans hold, not strong buy. If you're trading or investing, watch the upcoming earnings for updated guidance on USDC growth and yield impacts. This is not financial advice. Do your own due diligence and or consult a professional. So yeah, I mean, that's with any investment. Every single investment has risks. Every single one. You just have to weigh those risks out are you willing to set in that for long term? Their business model does, and it can scale higher, right? But you need more adoption. You need more participants. You need more people putting money into USDC. So I broadly use USDT, but it isn't because I like it better. It's the biggest one, and most platforms support it. I can't trade on weeks with Circle, but you can trade on other platforms with Circle. Instead of using USDT, you would be using USDC. So it's one of those things. If it could go up, and it could be a massive growth win when the crypto sentiment becomes positive again. I'm sure people will look back in history or back to today's time in the next 4 years and wish they would have bought Circle at $60. That's generally how it goes, right? Bear markets make people have bearish sentiment. Bull markets make them FOMO buy. But in reality, if you're wanting to be a long-term investor, scooping things up that you have positive, like if you think they're going to grow in the future, you should definitely be buying them when they're bearish. Right? Rate cuts aren't very good for this, as they make money specifically that's tied specifically to their it makes their margins smaller, right? And we know we're in a rate cutting regime, and we know the new Fed chair incoming wants to cut more. So that's also going to put headwinds on Circle. I don't know how low it will go. Nobody does. But majority of the analysts are saying it's at least a hold if you own it at these prices. They're not telling you to go buy it. They're just saying if you already own it here, just hold it. And I agree. I think the crypto market will get back to positive sentiment. Bitcoin is the leader of the crypto market, generally speaking. Unless you think Bitcoin is done. Some people do. I am not one of them. I think Bitcoin is going to be much more expensive in the future. I don't have crazy targets. I listened to one guy today. Here, I think I still have him. No, that was not him. I listened to one video today where one analyst was saying 1.33 million by the year in 2026. Obviously, that guy is crazy. I don't think Bitcoin gets to $1.3 million by the end of the year. But I don't have anything that tells me it can't do that either. Bitcoin could get really bullish, especially if Saylor isn't lying. If 8 of the top 10 banks are accumulating Bitcoin right now, then yeah, Bitcoin could go up much, much higher. It doesn't feel like they're doing that. But it doesn't feel like they're doing that because price isn't super uber bullish. But then if you wait for price to get super uber bullish, you've waited too long. It's just one of those things. You just have to weigh out the risks for yourself. Do you think crypto is dead? If it is, then there's no price at which you should invest. If you think it isn't, and it is, there's going to be a much better use case for crypto in the future, then yeah, you got a chance to buy it on sale. And that's all it boils down to. Currently 0 fees on silver and gold on weeks if you opt in, for what that's worth. Thank you, Wes. 0 fees is very helpful, especially if you are an active trader. I do have a link in the description if you want to trade gold and silver on weeks. You can also trade other things, but right now it's new, so there's not much liquidity in the stocks. But yeah, there's a lot of of stocks to trade on the week's platform. I still haven't gotten filled on the gold short. We'll leave it out there and we'll see what happens. Here's the stocks you can trade. Like I said, very light liquidity. Very light. 27,000 contracts on Nvidia. Very thinly traded right now. But Coin, Apple, Nvidia, MicroStrategy, Tesla, Amazon, Oracle, Palantir, I don't know what that is. Reddit, I don't know what that is. Meta, Google, and then SPY, Hood, and Qs. These are the stocks you can trade right now. It's a futures, perpetual futures contract, so it never expires. That means you can trade it on the weekends. They just don't move a lot on the weekends. I expect this liquidity to go up, obviously, once more and more people realize that they can protect their downside moves by using futures. They will. Options are a good way to do that too, but compared to futures, options suck. Options have a premium that you have to pay. As far as I'm concerned, the PDT rule exists on options still. So, people that have small accounts can't trade more than 3 times in a week, which you shouldn't be trading that often if you have a small account with options. But with a futures platform, as long as the fees are low, you can trade as aggressively as you want, as long as you know what you're doing and you're good at mitigating risks. But yeah, the link will save you 20% on all fees, and gold and silver, like he said right now, have 0 fees. You can trade all these metals. I don't know if they're going to put things like copper, and right now it's just precious metals. But we'll see. We'll see. Right now you can trade gold with as much, like a decent sized position. It's very easy to get sized up on this with just 20x leverage, where you could make a few $100s on a daily basis, especially while it's moving. It is moving a lot more right now because volatilities are still jacked up. But gold will slow down, so will silver. Eventually they will be trading for ranges will be very small again. Dollar weakness must still be hampering the downside to this. I mean, the USD JPY trade is just smoking right now. It's going, gone. The dollar has broken below monthly support on a 4-hour basis. So let's go check that out real quick, and then we'll wrap this stream up. I will answer any questions that you have. If you have any questions, or if you have an asset you want me to take a look at, drop it in the chat, and I'll take a look at it. Let's go get the DXY chart. So monthly support is right there. And you did break down below it here, so we'll see if this ends up acting as resistance in the future. It was resistance back here, and here, and here. So we'll see if it becomes resistance again. But this is where the dollar needs to break under for the month of February. So that way we can say, at least we do have that monthly breakdown. So last month in January, we trade well under that monthly support level, but closed back above it. So that kind of sucked. But if this month can close under it, then you will have a close below monthly support. That will bring in a lot more sellers. I don't know if it will be a trap. Obviously, we'll see. If the buyers think that this guy is more like he's going to help dollar bulls, then dollar bulls will show up. But as of right now, it looks like it's trying to break down this very, very long-term trend. Very, very long-term trend. And the fact that you've been trading sideways here since June of 2025, it could be a sizable breakdown. That's how I'm positioned for it anyway. I don't know that I'll be right or not, but if it does break down, I do believe we could see a nice move lower in dollar. The chart looks good for it anyway. All right, let's answer some of these questions and wrap this baby up. The divergence between ESNQ and YM has been concerning to Wes as well. I don't know if there's that much divergence between them, but yeah, I'm concerned that you're seeing that much money rotate out of growth into value, and the S&P's refusing to break out. That is concerning. We could be getting ready to see a bigger move lower on the S&P, but if people stop rotating from growth to value and start going back to growth, then you're going to see the S&P break out, and it's going to break out in a big way. Because we're in a pretty long-term range on the S&P. So I think it'll be up to these things. So Tesla did start to find resistance here. Nvidia is also finding resistance here after a large move on Friday and yesterday. So curious as to what that was. Huge rally off those support lows. As long as it's trading under the yearly opening range, though, I think it's okay to have a bearish bias on it. So it might trade here for a few days in this larger range, but we'll see. We'll see. Can you check out HIMS? Is it worth to play a long with a tight stop for a gap fill? I never trade for gap fills. Let me just say that right off the bat. I don't trade to or away from gaps. I think gaps, usually they fill, right? Usually gaps do fill, especially if the asset is bullish. I don't know why it's getting absolutely hammered. It's a very volatile stock. It's off 75%, so very similar to Circle. I don't think HIMS has anything to do with crypto, though. I think they're just, yeah, I don't know what happened. As far as the technicals go, this thing is bearish. I don't see any reason to assume that's going to stop. Not only is it bearish and has it been bearish for the last several months, but this month is seeing a large downside continuation move. And with that being said, obviously my bias would be more bearish. I would not be looking for fresh shorts on it down here because it is off 75%. So in terms of a short, I think you've already squeezed about as much juice out of it as you can. So it's just now it's going to be, where does it find support? There's nothing on the yearly. You have an old quarterly swing low that hasn't been liquidated yet there. I mean, it's going to be just like Circle. We can look at analysts' ratings and see what they're saying. The technicals are, yeah, it's pathetically bad. So only 19 analysts have given this stock a rating, and only 4 of them say it's a strong buy. Only 1 of them says it's a buy. 12 are just hold. And then 1 and 1 on the sell and strong sell. So it appears like analysts don't feel great about this one that much. So I gotta wonder why. It's a very new asset. It just started trading in 2019. So it's extremely volatile. That's all I can say about it. But yeah, I mean, if they make money, I have to question why it got hammered so bad. It's massively oversold. Yeah, I mean, it's massively oversold on the daily. It's at record levels. Like, if you ignore when it first started trading, all of that stuff, you're at record levels. Yep. You're the lowest it's ever been. So I definitely would not be a seller here. Just the fact that price is elastic, and I know that it's elastic, I could probably put on a long scalp on this if this holds a support right here, intraday. Like, if it could get down there and refuse to go lower, I could put on a long scalp, like buy a call or something, a call spread 30 days out or something like that. I don't know as far as long-term owns, like buy it and hold it for long-term. I don't know anything about it. But technically it doesn't look good. It's a very risky buy because it is still very aggressively being sold. Yesterday it got hammered. Post market, man, they killed this thing. That's a 30% drop. That happened at night when you couldn't do anything about it. Very volatile, very dangerous stock. So I would probably give it time to stop being so volatile before I would be thinking about investing in it. It's got earnings coming up too pretty soon. So really and truly, do I think this little gap right here will fill? Yeah, probably, right? Most likely. Once it's done being sold off, it'll probably most likely get filled. But does it get filled from here or not? That's the question. I can't answer that. It is very oversold on the daily. It is very oversold on the weekly. So yeah, I anticipate a bounce is coming soon. Eventually, it'll exhaust the sell side and it'll bounce. It's going to be hard to time that, though. Very dangerous. And that's about all I can give you on that. You could probably put on a cheap trade. Let's go check their options and see if they're spready or what. So they have weeklies. That's good. Let's see. Yeah, you're gonna have options. You're gonna have not options. Sorry, you're gonna have earnings in between. So less than 3 weeks, right? So if you try to go out 30 days, you're gonna have to go out. Ooh, the implied volatility on this is massive. You're gonna pay a premium. You're gonna pay a huge premium. I don't like scalping options when the IV's up over 100%. I like scalping options when IV is low, under 50, because you're not paying so much extra premium when the IV is low. When the IV is high like this, you're paying double what the option is worth. So that means you could literally be right on direction and still lose money if the IV gets crushed out of this thing. It's probably not going to get crushed in the next 2 weeks. I expect the volatility will stay high for a little while. But you could put on a spread, right? You could like buy the 19. You're looking for the gap to be filled. That gap goes all the way to 21.20. So you could put on a spread trade. You could like buy the 19 strike and sell the 22 strike, and that would eliminate some risk. But clearly that would also limit the upside profitability. And you can see here, that's a very easy 2-to-1 risk to reward. And if you're wrong in 38 days, if you don't fill the gap in 38 days, you'll lose $89. If you're right, you'll make 200. It's a very simple trade to put on. Very minimal risk. The spread isn't terrible. The spreads are okay. 140 to 167. I usually don't trade anything that has wider than 40-cent spreads. You're well within that parameter here. 27 cents on that ask. Less than that on the bid. So the spreads are okay. Liquidity's good. See a lot of participants here at the $20 strike. I don't know if they're long or short, but I wouldn't be short down here. That's a fact. So this trade could pay out. It's not going to pay out a lot. It's not going to be life-changing money. But if I was going to take it, I could take it based on this. And then the only way I send that trade off to get filled would be if it refuses to trade and close under 1783. So you're going to have to wait till the end of the day. Let's see, A, does it get down there? And B, does it act like support when it does get down there? But like the majority of that gap came 2 days ago. So clearly the sellers aren't done with this thing. Every bounce has been faded. Every bounce. Bounce faded. Bounce faded. Bounce fading. It's currently fading. Just be very careful. It's a very easy, simple risk though. $89. That's nothing on one contract. One option spread. That's a long call spread is what that trade is. Just a simple spread. It eliminates the risk to the downside, or you could just put it on with the long leg only and just leave off the sell leg if you're okay with losing $250. This would be probably the best way to trade it. Just chalk that $250 up to as a loss already. If you can afford that, then put this trade on. Because as you can see, if you do get in the money, and you don't need it to go far, just fill the gap and you'll be in the money. The in the money premium pays decently. If you get a huge bounce out of it, to where you get a run up to like 25 or something, you're going to make a decent amount of change on this. But to eliminate risk, to make it a very cheap, very, this not only eliminates risk, it also eliminates volatility. Being out 38 days means, A, you don't need it to happen this week. It can happen anytime just in the next couple weeks. So you're eliminating volatility and you're eliminating theta. You're already paying a massive premium, though, with the 118 IV. So it wouldn't be a very wide spread. The wider you go out, the more you have the chance to make money. But I would like something like this because it's a flat, easy 2-to-1, way more than 2-to-1 risk to reward. And you don't need a gigantic bounce. You just need a bounce back up to like 2350, and you would make the majority of that $200. Because you really you don't stop making money at 22 plus what you pay for the spread, which would be another $1. So you would need it at $23 to where you would make 100% of your investment back. But once you get above that, the move is very muted, small. It's easy to trade to put on. Very simple. Also, if someone would want to DCA Bitcoin for long-term hold, is low 60s a place to do it? This is where I start DCAing. So, and I'm going to explain why. Because historically speaking, we have to go to Binance, not Binance, but Bitstamp chart for this so you can see all the data. All the data. So this is Bitcoin's entire history here. And this is what I want to look at. I want to look at historical data. And what I can see clearly from this chart and this indicator is, historically speaking, whenever Bitcoin is sub 30, because 30 is oversold on the weekly time frame, that is where I want to start DCAing. I also know that in bear markets or extended bear markets, it can still go lower. And we know that, right? Bitcoin could still go lower. The 200 simple moving average is at 58 or 59K right now. You haven't hit that yet. So generally, I would rather that happen with the oversold. Like, I would like to see it hit the 200 simple at the same time as being oversold on the RSI. As that just puts, it puts the probabilities back more in my favor. Right? When I can put it on with 2. Let's go ahead and do the log chart so you can see down here. So it hit oversold in here at $324, but it traded lower, and on that massive capitulation, another 50% lower. So by adding right here, right now, you could see another 50% drop. So you could add now, and then if you get that lower 50% drop, you could add again, and that would lower your cost basis. So just looking at historical data, yes, this is where I would want to start adding. Historically, it has been the place to get long Bitcoin. Absolutely. Absolutely. Every single time, if you would have been a buyer on Bitcoin for Bitcoin's entire history, this is where you would be a buyer. Yep. Now, obviously, there are still risks into owning Bitcoin. We don't know that big banks are investing. We do know that they are, right? BlackRock did. BlackRock has invested heavily into Bitcoin, and we know BlackRock would not have done that unless BlackRock thought Bitcoin was going to be around for a lot longer than 1 year. Because BlackRock didn't get their ETF even published until 2024. So there's no way BlackRock does that if they think that Bitcoin is dead in 2026. No way. No way. So yes, there are still risks associated with Bitcoin, and yes, Bitcoin can go much lower. 50% more is much lower. However, with that being said, the historical data shows this is now. Now is when you buy or start buying slowly. Yep, absolutely. Buying here on the oversold reading with the 200 test was not the low, and it took many weeks after that to get back into positive territory. So are you willing to buy Bitcoin now and be in the red for potentially 40 weeks? That's almost a full year. There's 56 weeks in a year, right? 56 weeks, 52 weeks, 52 weeks in a year. So there's a potential that you could buy now and be red all year long. Are you willing to do that? Are you willing to lose over half or even more of what you invest? If the answer is yes, then buy, baby, buy. Buy, baby, buy. I am. Absolutely. Absolutely. But I'm not saying the low's in. Nobody knows when the low's going to be in. Where it's going to be or when it's going to be, nobody knows. Those are things that nobody can tell you. But let's end this video on this. So, have we seen, or do we even think that we are in the probabilities that say we should be buying if we want exposure to Bitcoin? Obviously, if you don't want exposure to Bitcoin, then you shouldn't be buying Bitcoin, right? But if you want exposure to Bitcoin, so let's pull this one up first. This right here shows us that extreme distances. Why are extreme distances relevant? Well, because we know that probabilistically speaking, there's very few times that Bitcoin gets this extended, right? Extreme distance, how far below moving average? The distance below the 200-day moving average. So this shows you right now, you almost hit, yes, this was on Thursday. This screenshot was taken from Thursday. You hit almost 3 standard deviations of a move under the 200-day moving average. If we go ask Grok, how often has Bitcoin moved 3 standard deviations lower than its 200-day MA? How often has this happened in Bitcoin's history? Let Grok think about it for a second. I know the answer to this question already. It's never, but we'll let him pull it up so that way you know I'm not lying, right? But it's never done that before. This is the largest move in terms of standard deviations below the 200 moving average ever. So we know that the move just in sheer the drop. Price is elastic. It will eventually bounce. And the further it gets stretched away from the mean, yeah, that's where you want to start accumulating, right? You want to accumulate on those large moves because, like I said, in terms of probability, you're on the extreme end of the bell curve. So on the extreme end, that's where you want to start adding. And you can see Ethereum and Solana, all of them moved lower. Well, not ETH. ETH has moved lower before in prior bear markets. But with Bitcoin, it is the lowest and it's ever gone. And then if we pull this up, Bitcoin in terms of price 1 day percent change. So this was the largest 1 day percent decline, Thursday was, since the bottom of the 2022 bear market. So you can see in the very bottom of the 2022 bear market, it had a bigger 1 day percent change. Now, in terms of points moved and not percentage points moved, because this day was like a 3.5 to 4% move. Or sorry, this was about $4,000. It was a much bigger percent move. It was bigger than 15%. But in terms of dollars moved, it was like 4K. It moved like $4,000. This day moved $11,000. So it wasn't as big in terms of percentage or the biggest percentage day drop, but it was by far the largest dollar day drop, like the largest in ever. So those are two things just showing you how extended that move got. Here is a screenshot of me asking Grok, how many times has Bitcoin went more than 3 standard deviations below its daily 200 moving average? Bitcoin is never, or literally 0 times in a reliable 10-year plus historical data set closed more than 3 standard deviations below its 200-day moving average on a daily basis. Never. That is a capitulation style move. All 3 of these show you, they give you absolute proof that it was a capitulation style drop. I have more. I can do this all day. Oh, wait. No, this is not the right one. Wait, what? There we go. Okay, so this one is the one I was trying to pull up. I don't know why it came out wrong. So here is just your weekly RSI with the 14. That's a standard metric on the RSI. Like if you just type in RSI and put it on your chart, it's going to be 14. It's a standard number. It's stock. It's a factory setting, if you will. So 14 is the trailing average. But anyways, if you look at every single time in Bitcoin's history, this goes back to November 2026, 2011. That's the very beginning. When Bitcoin hits or falls below 30, this shows you where it was 1 day later, 2 days later, 3 days later, going out all the way to 2 months later. So when we hit oversold in November 26, 2011, 2 months later, Bitcoin was up 100% from that 30 read. This has a 100% hit rate, by the way. 100% of the times that Bitcoin hit or fell below 30 on the weekly RSI, 100% of the times it was up 2 months later, higher. So here in this one right here, the 2022 one, it was only up 1% 2 months later. That is important. It wasn't up much, right? But it still was up. So anyways, you can see how like in Bitcoin's entire history, when it hits our oversold, it usually bounces 100% of the time so far it has. So this year in 2026, if Bitcoin isn't up, at least, you know, if it isn't up 2 months from Thursday, will be the first time ever that it failed to be so. So there's that one. Let's see here. This article, Bitcoin beats FTX COVID-19 crash with a record dive below the 200-day trend. So that move that we saw on Thursday, it was bigger than when FTX crashed, and it was bigger than COVID-19. COVID-19 was a worldwide pandemic where people by the millions were dying. So this drop that we just saw on Thursday was bigger, as if like there's more risk out there than there was back then. Think about that. And then finally, I'll end with this one. BlackRock's IBIT volumes hit daily record of 10 billion amid Bitcoin crash. So, and as long as IBIT, the ETF, has traded, Thursday's volume eclipsed the biggest liquidation in Bitcoin's entire history that happened on 10/10, October the 10th, 2025. That was the biggest single day liquidation event in history. You liquidated almost $20 billion worth of money out of the Bitcoin open interest. Well, on Thursday, we saw 3 times almost. Let's say what it really was. It was 2.7 times more volume traded on Thursday than did on 10/10. Kind of smells and feels like a capitulation to me, right? So while some people do not believe that we've seen a capitulation style move, They're simply not looking at the data. They are simply allowing their biases of lower prices to influence their rationality, rationale, whatever. They aren't thinking clearly. This was a capitulation style move by every metric we can look at. Every single data point that we can look at will tell us that Thursday and Friday was a capitulation. Is it going to mark the cycle low? The answer to that is maybe not. I'm not saying that the cycle low is in. What I am saying is that we are closer to a local low, and I almost know. I don't know because it's probabilities, right? But we're on the very, very freaking edge of it, on the fringe. If Bitcoin makes a lower low in the next week or two, it will be because of a massive news event. If no massive exchanges collapse, as long as Tether stays solvent, as long as Binance stays solvent, as long as MicroStrategy stays solvent, right? As long as you have no massive bankruptcies that occur in the next 2 weeks, I would be willing to bet you with pretty much any amount of money you want to take the bet with that this will be the low for the next couple weeks. I'll take that gamble with anybody. Any single person alive that wants to take it with me. Now, with that being said, it can obviously still go lower. But people should be saying that this is close to a capitulation style event because it is. I can show you 10 more data points if you want. Every single thing we can look at points to, yeah, it's probably going to mark a local low for a little while. You're probably going to see a lot of sideways chop from here for the next few weeks. So you're not missing anything. That's important. You don't need to go in balls deep with a 100x leverage long from here, right? But at the same time, I wouldn't be looking for fresh shorts down here either. Now, in 2 weeks, after price is chopped here for a while, that will be different. If Bitcoin hasn't left this range in the next 2 weeks, then yeah, shorts will be going right back on it because it will have had time to reset a lot of these indicators. And that's what's going to be required moving on. So you can see how much Bitcoin is struggling to put in and keep making fresh lower lows. Those sellers that are selling yesterday and today are probably most likely going to get stopped out. I don't think right now you should be looking for shorts. I think if you're looking for shorts today, anywhere in today's range, you're on the wrong side of the market. And the probabilities are with me. Like, they're with me a lot. A lot. But with that being said, obviously, I'm not expecting a gigantic bounce either. So I would be a buyer near the daily lows if you're looking for scalps. If you're looking to scalp this intraday volatility, I would be looking to be a buyer on daily lows. And that's all I would be able to do. I can't take near-term shorts right now. It's just too oversold. The sellers won. The shorts won. The bears won. They got their move. Now, in a couple weeks, price might be chilled out enough and volatility might come down enough to where you can get another volatile spike. So the longer it trades sideways, the more and more this volatility will chill out. You can see how this volatility metric is still pinned to the ceiling. It doesn't feel like Bitcoin is very volatile right now because it's kind of a small daily range, or it looks like a small daily range. It is. You're only down 0.6%, which is perfectly within normal volatilities of Bitcoin. So the more days you spend doing this, the quicker this indicator will cool off. So similarly to like what we did in December, here was December's price action. After the big run down in November, we had December. December was a choppy month. I figure the rest of February and the beginning of March will be very sideways choppy as well, to give volatility time to chill out. Once volatility gets back down to the lows down in here, well, then you can look for those short side entries again, because volatility will be on the floor. It doesn't mean that this indicator is not directionally biased. This indicator just shows you when volatility is low and when volatility is high. Volatility can happen in bullish directions as well as bearish directions. And you can see how volatility started to expand through here. That was through bullish moves. So it's not a directionally biased indicator, but right now volatility is still pinned to the ceiling. So volatility is still way elevated right now. And because of that, we could see lower lows. Absolutely. But I think this right here crushed so many short sellers, that, especially ones that were trying to get in because they thought, once it got into the 65s and under, they were going to see a 30K Bitcoin. Well, no, price is elastic. It's elastic. It moves it moves in waves. The further stretch you get away from the mean, the bigger the probabilities start to skew in terms of it's going to start to go in the opposite direction. Now, that doesn't mean we're going to see 18 days of straight up either. You could literally stay right here for the next 2 weeks. We'll see what it does, but it's too overdone for me to look for shorts. I am short. I've been short since October, and I'm not closing my short. I'm going to leave it open. So, just in case there's more downside. Generally speaking, when I do get these kind of capitulation style moves, I do kind of want to start taking profits on any shorts that I have open. But because I'm buying and adding to a new cold storage wallet, I'm literally offsetting that. I'm basically taking profits on the short by making another cold storage wallet. So, yeah, I want to be more skewed to the upside than I am to the downside down here. So if you think about that in terms of how you're positioned, right? You don't want to be 100% positioned to the downside here. You want to be more positioned to the upside. You want to keep some risk on for downside pushes, but you want the majority of that risk to be for the upside rally. That's how I feel about it, and that's how I'm positioning right now, currently. So yeah. As your gold short, oh, I forgot about that. Did we get filled? We did get filled. Sorry, thank you for reminding me about that. Yeah, remember, dollar is weak today, so trying to get short gold is not a good trade. You're already above the supply zone. This is where I wanted to see it drop. It isn't dropping yet. We'll see if it does. But thank you for reminding me about that, because I didn't have a stop loss out. How about shorting gold miners instead? Is your gold short just a scalp? Yeah, it's just a scalp. It's a futures scalp. It's right here, right? It's just a scalp. A small position size. It's got 20x leverage on it. So if it rolls over, it'll pay a few $100. I'm not looking for the death of gold or anything like that. I'm just looking to scalp the range. That's it. Scalp the range. So if this continues to move against me, obviously I'll close it. I want to see it reject these prices and start to head lower. If it doesn't shoon, I will close it. Yeah, I'm not going to hold it all day if it stays in the red all day, because the dollar is weak. gold can go up just because the dollar is weak. So we need to see the dollar bounce or something, and maybe this will work out. It's not a great trade setup because it's still making higher lows. The better trade setup will come when gold starts making lower lows. So in terms of lows, yesterday it made a lower low, but then it bounced hard. And now today, like, you're way up off that low. So once gold starts taking lows out and starts making lower highs and lower lows, that would be the better time to start looking for gold shorts. We could be early here. We could be really early. Gold could make a higher high today. But we could be a little bit early looking for gold shorts right now with dollar weakness. So it's not a great trade setup. Everything else says you shouldn't even be looking for shorts yet. Shouldn't be looking for shorts just yet. But we'll see, right? We'll see what it does. It looks like it's fading, but only time will tell if it is or not. This is still a higher low. It doesn't look great, right? It isn't doing what we wanted to see it do. We wanted to see it trade up into supply and reject. As long as it's not rejecting, I might be wrong on this trade, but it's still early. Still early. So we've gotten above this 30-minute high. So you've made a higher high there. If it fails here, then I'll keep it open. Obviously, if it continues to push up, you're getting ready to open a new 30-minute candle, then I'm probably wrong. We want to see it start to weaken up a little bit here. So we got a new candle. We want to see it start to show us that the sellers are here. Thank you for reminding me. Damn, that could have got real bad. Hang on, where was that comment? Okay, there you go. Yeah, and as far as shorting gold miners, you can obviously, if they have options, or if you just want to short the shares. I haven't looked at any gold miners lately. I can go look at a couple of them. I have a couple of them over here on the P watch list. Where are they? Let me see. Here they are. AU is a gold miner. Yeah, I mean, it doesn't look like it's done at all. Oh, that weekly looks bad. But you're above last week's high here, so it's clearly still bullish. You're above last week's high. As long as you're above last week's high, I don't like a short on it. Yeah, it doesn't look good for a short. If today fails back down under last week's high, then maybe I would put a short on the gold miner. But it would need to do that at least first. Right now, it's still pushing. That means it's literally stopping out shorts as we're speaking. It's literally stopping out anybody that shorted on Wednesday of last week. If they got short on that day or later, they're literally being stopped out right now. So it ain't done yet. Be careful shorting gold miners. They move quickly. But that's because so is gold right now. What worries me for Bitcoin is that on 3-month chart, there's a huge regular bearish divergence. There is a wallet that sold everything he bought from 2012. Now imagine that. Imagine you bought Bitcoin in 2012. You're not going to cash out? I would. He's a billionaire probably. Yeah, I'm done. I make $1 billion in any industry. I retire. I don't know about you, but I retire. I pay my $500 million in taxes, and then I go buy an island and relax on the beach for the rest of my life. I'm never looking at a computer screen again. Screw it. Yeah. Yeah, I mean, that doesn't, just because that guy's retiring, that doesn't mean anything to me. Could it be because he doesn't think there's anything left to get? I doubt that. It's probably more just, do I want to allow my billions of dollars to go bye-bye? No, I would have retired too. Yeah. You said specifically though the 3-month has bearish divergence. Let's be honest, a quarterly indicator is such a high time frame indicator. What you're seeing here is there's not as much momentum to the upside. And the answer is, yeah, of course not. It's a $69,000 asset, right? This bearish divergence means nothing to me. This is a whole new cycle. In fact, it's getting closer to buy zone than a sell zone. Like, if anything, you should have been selling the highs, not down here. Historically speaking, you've never even been under the 50 on a quarterly basis on the RSI. That tells me the asset is not only bullish, but hyper bullish. And volatility is also decreasing. That is a bullish sentiment. That isn't bearish. Volatility is compressing and decreasing long term on Bitcoin. That is beautiful for adoption. Massively important for long-term institutional ownership. This chart looks phenomenal for long-term growth. To me. Not the bearish divergence. Like, yeah, no, I wouldn't be looking for divergences on this big of a time frame. I think, yeah, I mean, hey, if you're scared, you're scared. You're not the only one. You're not the only one. This business isn't for the weak of heart. You know what I mean? If you gotta be yeah. Bitcoin is not a safe asset. It is a very volatile asset. It isn't for the weak. It's literally for the aggressive. It's for the people who are just sick and tired of watching inflation destroy their money. Bitcoin is literally the best thing to invest in if you're sick of inflation eating away at your money. And it is. It has been since the central banks started. So the government would love nothing more than you to keep all of your hard-earned savings in the dollar. Because you're paying taxes on that to them, and they're taxing you behind your back with inflation. They're literally stealing it all from you. Bitcoin is the best investment to get away from that. It's better than any other asset class. It's better than gold. It's better than silver because gold and silver has only went up a little bit. Bitcoin has went up thousands and thousands of %. And we're very early on the adoption curve. Bitcoin's a protocol. So if you look at it in terms of adoption rate, you're super early. You're in about the same place that the internet was in 1994. The internet just really started taking off back then. Compared to what the internet is today, compared to back then, I think in 94, I didn't even own a computer yet. My first computer I bought as a 20-year-old adult. I owned, PlayStations and stuff like that my whole childhood, but as an adult, it was way out of high school. So if we're looking at it in terms of adoption, yeah, 400 million people are in Bitcoin right now. There's 8 billion people on the planet. Once Bitcoin gets represented by, even a small percentage of that, this thing is going to moon. But there are risks. Quantum computing is a risk. As of right now, it's just FUD. They are working on quantum computing, but they are so far off to any workable applications. They're years off. So right now, there are just as many people working on fixing Bitcoin's code to make it quantum proof. If they do that, that will be a huge rally for Bitcoin. Think about that for a second. Bitcoin is no longer, or it is quantum resistant. What do you think happens to Bitcoin's price the day that that news article drops? Bitcoin is now quantum computer resistant. Kaboom, baby, it moons. It goes to the moon. And there are a couple other things that are out there that are headwind risks. I think the BIP 110 drama, it is what it is. It's drama. But what BIP 110 is better for Bitcoin long term. It takes JPEGs and ordinals and NFTs off of the Bitcoin blockchain. The only thing that should be on Bitcoin's blockchain, in my opinion, is monetary data, right? Transaction data only. I sent you so many Bitcoin, you sent me so many Bitcoin. That kind of data should be the only data stored on the blockchain. If you want to make ordinals and inscriptions and JPEGs and NFTs, make it on some other blockchain. Why does it got to be Bitcoin? Bitcoin is a hedge on government inflation. And we want it to continue working like that. Because that's what it was designed to be. That's exactly what it was designed to be. A hedge against inflation. A way for normal, average, everyday working class citizens to be able to invest into an asset class that is inflation resistant. That's why Bitcoin has such a high ceiling in the future. But there are headwinds. Every risk is every investment has massive risks. All right, watch BTC 68-69 battle for capitulation confirmation. Yeah, it's already capitulated, my bro. Most likely you've seen a capitulation. The data suggests we have. Now we just need price to confirm that. All right, we just need price to confirm that. It'll take price a little bit longer to confirm that, but obviously if you take out Saturday's low and you keep heading lower, be careful because it could go lower. Nobody knows if the low's in or not. Something is very fishy. Everyone sees history and is saying this happens every single time. Yes, obviously the 4-year cycle is probably dead. I don't think that Bitcoin sold off because of the 4-year cycle. It could have. Nobody knows for sure. There were a lot of massive risks. A lot of them. But yeah, I'm not looking for it to repeat like it did every single year. I'm not. I'm trading this thing week to week, day to day. New data, new info comes in week to week, day by day. The way that I see Bitcoin long term, it's going to be much more expensive. It's going to have a gigantic breakout eventually, and it'll be off to the races like gold and silver were. All right? That's what I want to happen in the future, but there are some things that need to get tightened up first. And yes, I agree with you. The 4-year cycle model is one of them. It will not. The more institutional money gets into Bitcoin, the less that you're going to have these boom bust cycles. Volatility keeps going lower and lower and lower. So the boom bust cycles will get smaller and smaller and smaller. So yeah, people looking for the exact same thing to repeat every 4 years, it's probably going to stop eventually. As of right now, it hasn't stopped. Bitcoin did exactly what it did 4 years ago. So it makes it hard for anybody to say the 4-year cycle model isn't the reason why it didn't sell off. I mean, it literally sold off when it should have, right? Within a 3-month window of when it should have happened. October, November, December. That's literally every 4-year cycle is when Bitcoin topped out. Every single time. So the whole Knots drama that started within the core devs and the Knots people, they probably shouldn't have started trying to take over with the BIP 110 soft fork during the same time. Because in my opinion, that's uncertainty, and that uncertainty is most likely why you saw a lot of people haul ass out of Bitcoin. That's heavy uncertainty. You're literally taking over from the core devs, the devs that have been in control of Bitcoin's code since day one. That's huge uncertainty. And that's a headwind. Yeah, there is no reason to expect it to do the exact same thing. Markets don't work like that. Markets work on emotion and money. Money flows into assets. Money flows out of assets. Eventually, Bitcoin will trade like every other financial asset. But it's going to be much more expensive in the future. For me, that's the way I feel about it. But it's like I said, you're going to have to fix the quantum thing. You're going to have to fix that. If you can't fix that, Bitcoin won't be the hedge. It won't be what everybody intended it to be. It can't be. If every wallet can be hacked in 1 second, yeah, it will be useless. It'll drop to zero. But people are working on that problem. There are a lot of them working on it. Pull back to 5,000 Val held clean. I don't know what you're saying. You predicted a grind extension. Okay, yeah. I can't understand your question. You're not even asking questions. You're just calling out stuff. That's fine. I don't have any problem with it, but all right. Who worry about capitulation? I'm just looking at is it going, who worry about capitulation? I am just looking, is it going lower? Is it going lower? If not, then where will it go before? Yeah, that's all any trader is doing. You're looking at prior swings and where price is trading in relation to those prior swings. It doesn't matter where it's going. You're right. It doesn't. It doesn't matter. You can make money on Bitcoin if it goes down or if it goes up. Yeah. I'm not trying to call a long-term direction on Bitcoin. All my job is to do is teach you all how to trade this asset for the rest of your life. And if not this asset, any other asset. Right? Because a lot of people think discretionary trading is going to get priced out of the market by AI. Well, it hasn't yet. It hasn't yet. So there is no reason to anticipate that it will. If you don't want to be a discretionary trader, you don't have to be. You can write code. You can build an AI agent and let him trade your portfolio for you. I'm just trying to teach people, something that they can do long term to generate a revenue stream for themselves. As long as candlesticks operate the way they operate today, it will not be priced out, because all I'm doing is looking at where the objective trend is going and then positioning myself for that continuation and spot reversals when they happen, right? If a reversal happens, I want to be on that. If a bottom is happening, I want to be on that. Bitcoin's trend long-term looks good. And there are headwind risks, no doubt. There are headwind risks on every asset, every single one of them. Nothing is a guarantee in investing. Nothing. So to try to figure out if the low is in or not is irrelevant and useless. Right? It kind of is. So as a trader, this is what I know. Since Bitcoin has already had a sizable loss and got extremely extended in one direction, I am anticipating price to snap back to a mean. What that mean will be, I don't know. Right? Usually it's the 21 exponential. That's a pretty damn good mean. And if you look at Bitcoin on a 4-hour chart, it's already snapped back to that mean. Now, I don't anticipate the 4-hour 21 is the mean. It is right now, but I don't anticipate that'll be like that forever, moving on into the future. But it does a really good job of acting like the mean, doesn't it? Yeah, I mean, it's always with price. So you have already, in a sense, snapped back to where a lot of people is probably now looking for shorts. I think you're going to need a larger snapback. So I will look for shorts up in here if price begins to fail up in here. But down here, I can't be looking for shorts because the move has already happened. I missed it. Well, I didn't miss it, but you get what I'm saying. You've missed it. If you're trying to look for shorts here, looking for a large move lower, you've already missed it. You've already dropped 50%. Like, yeah, you missed a significant portion of that short side entry. Now you're probably going to see a lot of range bound trading. This is where traders will, good traders will flourish in these ranges. Some people will make money, some will not. I won't make money every day, but long term, I'll be fine. And that's all I'm trying to teach you guys, how to do this. The same thing, no different. So yeah, I like Bitcoin long term. I have one of my cold storage wallets right here on my desk. It is right here. That is my cold storage wallet. One of them. I'm going to start building up more money or more Bitcoin and accumulating it and moving it over onto a new cold storage wallet. I have 2 kids, so I'm going to give this one to one and give the other to the other later on, right? I am not trading Bitcoin or accumulating Bitcoin for myself to get rich. I am trading Bitcoin and accumulating a lot of Bitcoin for my kids' future. My future is pretty much set. I can't take Bitcoin with me when I die, so it's pretty much useless. But to save money, if it turns out being in the future a really good inflation hedge and ends up mooning, then these 2 cold storage portfolios will be beautiful presents to give to my children one day. Right? That's all. If Bitcoin goes to 0, no harm, no foul. I will still be fine and I will still be able to leave my children money. All's good. All's good. All is good. The future is it looks good. Look at bread. 2019, 130. I don't know what bread is. Yeah, all right. Any other questions? It looks good. As long as Bitcoin is trading above 67,293 and making higher highs, it's going up. Watch those highs setting at 76,865. Yeah, I mean, we'll see what it does. I don't know if it's going to get a big bounce or not from here, but we'll see. We'll see. We do know that big volumes are being thrown down right here, right now. Let's go back over here for anybody that did not see that. So if we just look at February's data here, forget about January, just look at February's data. And we can pull up the visual range. You can see that there are massive volumes being thrown down here between 71,000 and 68.2. Huge volumes are being thrown down. Now, this doesn't mean that we're going to see an upside reversal by any stretch of the imagination. But you can see massive volumes are being thrown down here. Not much was thrown down here. Why is that? Why is there so much more volume up here than down here? Because that was a very fast move. Nobody had time to even try to trade that. So now you're seeing a large buildup here. So I would expect this range to stay the range for a long time. As you've got, this is value. You're right in the middle of value right here. For this month. So your monthly low is probably in. Monthly low is probably in. We'll see though. All right, we're gonna wrap it up. Yeah, as far as gold goes, it is starting to rotate back away from these prices like we wanted to see it do, right? Now that doesn't mean it's gonna keep going down, but we are starting to see that reaction that I wanted to see. This candle right here dominates the majority of the daily range. And then this secondary candle right here is the expansion. So as you can see, you barely traded above that. And then that's where you started to see price get a little bit heavy, right? So if we're going to see a downside move, I want to see it happen from here. If you got filled on the gold short with me, because I got filled on it, now I'm in it. So if you got filled on the gold short with me, basically the way I'm going to mitigate risk later on is if it starts closing 30-minute candles back above 50-30, I'm getting out of it. All right? Because that would be about a $50 loss for this position size, and that's all I'm going to risk on this one trade. So if it starts to close candles above 50-30, I think the downside trade is busted. But hopefully we see it, start to push lower as the day goes on. Now, with that being said, dollar is still very, very weak, and dollar weakness can affect gold shorts. If dollar is super weak for the rest of the day, then you might not see gold roll over. However, if the dollar has found the low of day today, right? Which, I don't know that it has, but if it has found the low of day today already and it starts to get more bullish, then that could help the gold shorts. Now, dollar is playing games down here at monthly support, but this will be the level for the dollar to beat right here. These levels. So your trading range for the dollar for the rest of the day is probably going to be up there to down here. So chop in both of these areas for the rest of the day. And then maybe tomorrow, if the dollar is going to continue to be weak, we see that rollover occur. Or range expansion has already happened to the downside. But you can see that those Tuesday sellers were not as strong on the dollar as I thought they were going to be. But it still fits a short side trade. It back above last week's low, it's no longer a short. So if the dollar gets back up above this today, the euro and pound longs might stop working. Because this is a crucial and key level for this entire week. If the dollar can continue going lower below this, I like dollar shorts all week long. So that puts gold shorts into a little bind, if you see what I'm saying. So don't continue to try to short gold all day today and tomorrow and the next day as long as dollar is super weak, because you could be wrong on direction. But anyways, we're going to wrap it up. Thank you guys so much for being here. As always, hopefully you learned something. If you did learn something, drop a like. Hit the subscribe button if you haven't already. We absolutely do live streams every Tuesday and Thursday at 9 in the morning. And we do live trades. And we try to analyze the markets in a way that keeps you guys on the right side of the markets for the majority. But yeah, thank you so much. Make sure you guys continue to trade safe. Make sure you trade smart. And as always, happy trading, everybody. Where is the take profit on AUX? So gold trade, where's the take profit? Just somewhere lower. I don't have a take profit on right now. I just put the trade, I just opened the trade. So I really don't know. If you want to take it, you would just basically make it to be like wherever your risk is. So if you situate your risk right here, put the take profit down here. Set it to where it's like a 2-to-1 risk to reward. All right. So if right here is where we're looking for shorts, and then up here is where we're looking for the short to be stopped out, then we want the take profit to be down in here, anywhere down in here. So it would be a fresh daily low, but it's still well within what you did yesterday. So I'm not looking for a massive breakdown or anything today, but a lower low. I want a lower low. If I can get a lower low on gold, I'll call that good enough and I'll bounce. You should too. So yeah, that's what I would do. All right. You guys have a fantastic rest of your day. Make sure you guys trade safe, trade smart. And as always, happy trading, everybody.